So why we have inventory as a separate chapter for CA Foundation is that inventory affects two things. It comes in balance sheet also, and it comes in trading account also. Have you observed? This is one thing that affects balance sheet and P&L. Correct, no? And we should know one very important relationship. This closing stock is there, no? It is directly proportional to profit earned by the company. Okay. If your closing stock valuation is more, that year profit will be more. It will be overstated. If the closing stock is valued less, that year profit will be valued. If closing stock is less, then that year profit will be valued less. Correct? See, closing stock is altering profit also. It will also come in balance sheet. Since it affects two things, it's very important for us to understand inventory valuation. Okay. When I say inventory, what all will come in your mind? When I say inventory, you think it is only unsold goods, correct? No, it's not only unsold goods. It is finished goods. Finished goods, Andre? If you're a manufacturer, then whatever goods you produce, no, that is called finished goods. It includes work in progress also. It includes raw material. It includes stock in trade. It includes stock in trade. What's the difference between finished goods and stock in trade? Finished goods is, say, suppose if you're a manufacturer, then whatever goods you are manufacturing, that is called finished goods. Whereas stock in trade is if you're a trader. If you buy and if you want to sell the goods, then whatever you have in your godown, that is called stock in trade. Technically, both are finished goods only. Stock in trade is for trader. Finished goods is for manufacturer. Okay. All these. Then any other consumables. What is consumables? Anything that you consume during the process of production. That also will come under inventory definition. So all this, it's not only finished goods. Everything will come under inventory definition. Next. Now, if you go to accounting standard 2, that accounting standard tells that inventory should be valued at cost or net realizable value, whichever is lower. Why whichever is lower? Why not whichever is higher? Lower is because of the conservatism concept that we follow. Correct? No. What is conservatism? We read yesterday. Correct? No. We don't want to overvalue our assets because if closing stock is overvalued, profit will also get overvalued. So I don't want to show it at a higher number. Out of the two, whichever is lower, I will show it at that number. What nonsense, man. What is happening to this mic? Hello, hello. Hello. Okay. So I will value it at whichever is lower. Clear? It's because of conservatism concept. Because just see a situation. In a situation where the cost of your inventory is just say 1,000. You have spent 1,000 to buy that inventory, but the market value of the inventory has become 800. When you can fetch only 800 from that item, how are you showing it at 1,000? That should not be allowed, no. So that's why it is 1,000 or 800, whichever is lower. Okay, conservatism. Now let's understand what is cost. Okay, if you are a trader, then you would have spent some purchase cost that should be considered. If you have got any trade discounts, that should be subtracted. Okay, and if there is any non-refundable taxes, that should be added. All of you clear? Purchase price, any trade discounts minus any non-refundable. Tell me, GST is a refundable tax or non-refundable tax? It's a refundable tax. I'm talking about non-refundable because GST you'll get the input tax credit, no? So it's a refundable tax. These things. Then if you are incurring any costs of conversion, that also should be included. Cost of conversion is your cost of production. To produce a finished goods, what all will you use? You'll use raw material, you pay for wages, you pay for overheads, everything, correct, no? So all that will come under raw material, wages, any other overheads that you pay. Overheads is all the indirect expenses that you pay will come under your costs of conversion. Coming here, along with all these, any other costs until the inventory is ready to use, ready to sell. Until the inventory is ready to sell, whatever direct cost you will incur. For example, you have purchased inventory, you are paying some unloading charges. You are purchasing some inventory and you are paying some. What nonsense, man? Huh? Not going only. See, now there's no problem. Hello, 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 hello. Hello, 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 hello. Now no problem, no? The moment I start recording, you see, it will start. Hello, hello, hello. Everything was correct only, not till yesterday. I'll keep it in pocket. Hello? Hello, 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 hello. Hello? So what is the other thing? Any other costs which are directly attributable, that also we will add to the cost of the inventory. Directly attributable, andre, say suppose you are purchasing any goods and you are paying on the carriage of that goods, you are paying for unloading charges of the goods. All these are direct expenses that you pay. Without you paying this, the inventory will never become ready to sell. So until the inventory becomes ready to sell, whatever you pay, all that will be added to the cost. Sir, why are we adding to the cost? To do this comparison. I told you, no, as per accounting standard 2, inventory should be valued at cost or NRV. While determining that cost, you have to add all this. So cost of purchase, cost of conversion plus any other direct cost until the inventory becomes ready to sell. Okay. Now, will you add carriage? Direct expense. Will you add wages? Yes. Cost of conversion. Do you add purchase cost? Yes. Non-refundable taxes? Yes. Okay. All these will come. Let's understand on what all costs should not come. Which all you should not include. Which you should not include. Abnormal loss, you cannot include. Any abnormal loss cannot be included in the cost of the inventory. That means normal loss can be included. What is normal loss? Which you cannot avoid. But abnormal loss is something rare and which you can avoid. Abnormal loss cannot be added. It will directly go to P&L. But normal loss can be included in the cost of inventory. Storage cost. We spend some money to store the inventory. Can I capitalize it? Can I add it to the cost of the asset? The storage cost? Why not? Because generally storage cost is incurred after the inventory is ready to sell. Alva? Storage cost is incurred after the inventory is ready to sell. So that's why we will not allow storage cost to be added to the cost. Only one exception. One exception is there are some goods where storage is the part of its production process. Storage is the part of its production process. For example, wine. Wine should be fermented for 2 to 3 years. It should be stored for fermentation. In these cases, storage cost can be added to the cost of the inventory. Either where storage is part of the production, or else generally storage is not allowed to be added to the cost of inventory. Clear all of you? Then any general and admin overheads. What is general and admin overheads? Now this our academy has so many courses, no CA, CMA, CSUS, CMA. But we all have common marketing team, common accountancy team, accounting team, common finance team. They are common for everyone. They are called general and admin. Aitha, any expenses or any salary that you are paying to admin people, at the accounts team, finance team, marketing team, that cannot be directly added to the cost because it's not direct, it's indirect. No, whatever we are paying a salary to marketing people or whatever, that belongs to all the courses that is there in our academy, not only for uh, any one academy. They're doing it generally for all. So that we cannot add it directly here. Clear? Hmm. Then fourth one, selling and distribution costs. Okay. Any money that you are incurring on selling and distribution costs, because that is selling of inventory, whatever you are incurring, no selling expenses, etc. That cannot be added to the cost because please understand that expense is for selling the inventory. Here we are concerned with those costs which is producing the inventory, correct? No, so that's why selling comes in the end. So that costs are not included in the cost of inventory. All of you clear? So these are the four things that will not be included in the cost. So what all is included? Cost of purchase, cost of conversion, and any other costs which are directly attributable until inventory becomes ready to sell. That is okay. What we should not include? Abnormal loss, storage if it is not part of production process, general and admin overheads, selling and distribution costs. These are the four things which will not be included. Let's understand NRV now. What is NRV? It is estimated selling price minus. So with respect to your inventory, take the estimated selling price and subtract the selling expenses. What is selling expense? These are the expenses that you have to incur to sell the asset. Without incurring those expenses, you'll not be able to sell the asset. Basically, whatever commission you'll give to the brokers, etc. That should be reduced. That is selling expenses. It's very irritating, no? You're also able to listen it, huh? Huh? No, I don't know what is the problem suddenly to do. Hello, 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 hello. It's very irritating. Hello, hello, hello. Now it's fine, no? Huh? Ade, when I start talking, something is happening. A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, Q, R, S, T, U, V, W, X, Y, Z. Still it is there. A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, Q, R, S, T, U, V, W, X, Y, Z. You're not able to hear it, huh? Now you can't hear. Then we'll continue. So it's estimated selling price minus selling expenses. Okay, you'll compare this with cost and value inventory at whichever is lower. Okay. Now, very important thing which you have to understand from this chapter is that rule is there, no? Cost or NRV, whichever is lower. That is for all kinds of inventory. In inventory you have FG, WIP, RM. For everyone, for all kind of inventories, that is the rule that we have to follow. Okay. Now let's come to the valuation methods. Okay. Generally, how this closing stock comes to books of accounts is what you have to understand. What we'll do is, generally in real life also, there is two types of inventory taking. Aita, inventory taking. How will closing stock come to P&L or balance sheet? Aita, one is periodic inventory taking. In periodic inventory taking, our financial statements is prepared for 1 year. So at the end of that period, we'll go down, we will count. And whatever closing stock is there, we'll value it and we'll put it in balance sheet and P&L. That is called periodic inventory taking. There is one more called as perpetual inventory taking. Perpetual andre, there is no need to go down and count. Aitha, your software is there, no, that is only taking care of all the, you'll record purchase also, you'll record sale also in your software. So software will automatically calculate how much is the closing stock. Aitha, that is called perpetual. Two things. So we'll get the closing stock, we'll put it in balance sheet and P&L. Okay. Then we have some valuation assumptions. While doing the inventory valuation. Whenever the inventories are identical, andre, all the inventory we have is same. We are dealing with one same product. Then we'll face some problem. I'll tell you with the best example. Okay. Now say suppose I'm a trader. I'm trading with animals. At the example. Now there is one tiger, there is one elephant, and there is one horse. I thought tiger I bought it for 30,000. Elephant I bought it for 50,000, and horse I bought it for 10,000. Clear? Now what is the total value of my inventory? It is 90,000. Correct? No, easy. We counted. Now I sold horse for whatever amount. Now what is the value of inventory? Horse was 10,000. So easily you reduced 90, you reduced 10,000. Now the value of closing stock is 80,000. Now I sold elephant. 80, 50 hoitu. Now remaining is 30. So you're easily able to find out the closing stock every time sale happened. Correct? Now there was no problem. Why? Because all my goods in the inventory were non-identical. They were all different. So when I said horse, you knew which inventory went outside very clearly, and you came to know which are the inventory that is available right now. Imagine in my inventory, I have 3 same white horses. 3 same, fully identical. One is 20,000, one is 30,000, and one is 40,000. So my total closing stock is 90,000. 20, 30, 40. Now I sold one horse. What is the value of closing stock? You understood the problem. You understood what problem we are facing? Because all the horses are identical. You don't know which horse went outside. Now you cannot do the closing stock valuation properly. Now we don't have any other option. We have to take some assumption and we have to move on to do the valuation of inventory. What are those assumptions that we have? First assumption is FIFO. We'll assume that first in, first out. That means what? The horses which came first have left first. So what are remaining in the go down is the other 2 horses which came later. That is the assumption you'll do, and you will value the inventory. Say 20, 30, 40. So 20 would have gone. So remaining is 30 and 40. So value of my closing stock is 70,000. Then we have LIFO, last in first out. That means the horse which came last has gone first. The horses which came first are still there in the go down. That is the assumption you can do to value the closing stock. And third one is average method. You'll not worry about which horse went, which horse came. Just take all their costs, find out an average cost, and value your closing stock at that average cost that you will find out. Okay. In average also we have 2 methods. One is simple average and weighted average. Okay. Simple average, what is the difference between simple and weight? Simple average gives same weightage to all the items that is there. Weighted average gives weightage based on the quantity that we have purchased. If I've purchased a particular item in more quantity, then that price gets more weightage while calculating the average. Okay, we'll see how to calculate it. All of you got it? These are the 3 things we'll take and that we will use it for our inventory valuation. Okay. There is 2 more methods, which is famous methods to calculate the cost of the inventory. One is, anyone remember? No, no. Adjusted. It is adjusted selling price method. This method is generally used in retail industries. Okay, adjusted selling price. See, ultimately we want cost of inventory, no, to do the valuation. What you can do, you know what is the sales price of the inventory. You already know. From this, if you subtract gross margin, then what will you get? Cost only, no? So if you know the gross margin, reduce that gross profit, then that cost is what you can use it for inventory valuation. Best. This is generally used in retail industry. Why? Because in retail industry, the gross margin will be same across the products that they deal generally. Okay. And gross margin will be very clear in retail industry. Okay. Then one more method, that cost only. Name is this. It is historical cost only. Yeah. Sure. Mm, it is standard cost method. ಆಯ್ತಾ? What will happen in standard cost? If you are the manufacturer of the goods, alwa, finished goods is your inventory, no? If you are the manufacturer, don't you know what all you have spent? You know how much material you have spent. You know how much wages that will go. You know how much overheads that will be spent on that product. Then add it, no? You'll get the cost of inventory. That is what they're telling in standard cost. ಆಯ್ತಾ? You know the standard costing of each product because you are the manufacturer. You know, at least you can calculate, no, this much raw material has used, this much wages is used, this much overheads is used. Just add it and find out the cost. That is how you'll do it in standard cost method to find out the cost. Now, all the methods which we learned, no, here, all these is to find out what? Is to find out the cost of the inventory. Why? You know, whenever the inventory are identical, it will create one problem. Correct? No. So to solve it, we are using FIFO, LIFO, average. Then under these, we are using adjusted selling price or standard cost. Okay. This problem will not come in non-identical. Correct? No. That elephant, tiger, etc. So non-identical items will not create problem. Identical items creates problem. So I have to follow FIFO, LIFO or WAM to solve that problem. Clear all of you? So we learnt about periodic and perpetual also, no? So let's solve some problems on this. Do we have first, let's see, do we have any question from, do you want me to solve a problem from that FIFO, LIFO ledger? You know, there's a question on FIFO, LIFO, that box. That is okay, or we'll do those advanced problem? Basic first. One we'll keep doing today full. I've sent it. Okay. All of you just see here for those who want to understand FIFO, LIFO and other things. Okay. See here what they have given is the date of receipts of inventory. Aita date. December 4th, they have received 900 units of 50 rupees each. December 10th, 400 units of 55, etc., etc. And here it is the record of issues. Andre, whenever they have sold. Okay. Now, please understand, inventory taking happens in two types. One is periodic and one is perpetual. Now, calculation will be different in each kind of inventory taking. If perpetual inventory taking you are doing, then answer will be different. If you're doing periodic inventory taking, then the answer will be different. Okay. Now, three methods we have. Which one will do? FIFO. We'll take up average. Okay. No, all three will do. Hmm. Okay, let's do it. No, nothing, no problem. So let's first take up. Ah, okay. Now let's do FIFO. First in, first out. If we are following what? Periodical. Okay. Guys, in periodic, what is periodical inventory taking? Tell me. Periodical is for if my one period is 1 year, I am going for closing stock valuation only at the end. I am not doing anything in the middle. That is periodical. Okay. Now let's do FIFO for periodical. Periodical is very simple. For example, where is that question? Now see here. These are the issue. These are the receipts and these are the issue. No. The first thing that you have to do is first find out how much closing stock you have. Okay. How much is the total receipts that you have got in December? It is 2000. And what is the total issues that you have got? 1600. That means 1000 is your closing stock. The first job is that find out closing stock. Now I have to apply, FIFO, first in, first out. Now my total issue is 1600. All of you focus here. First in has gone first. And out of 1600 that has left my inventory, 900 has gone from this lot. Then 400 has gone from this lot. And 300 has gone from this lot. So total became, it became 1000. Correct? No, all of you. So the 1600 which has left as sales has gone from this and this because we are following first in, first out. That means the remaining lot will be from which one? Alva. So how much is my closing stock? 1000. So I will value my closing stock like this. 200 units, 60 and 800 units into. So this becomes 12,000 and this become 8. Take calculator. 37,000. 6. So your inventory total is 49. All of you clear? So that is periodic. What is perpetual? In perpetual, the inventory is only doing the uh, calculation of inventory. We are not doing it in the end. In periodic, we'll do the physical verification. In perpetual, we are not doing it. Alva, software is only doing. So you know how software does. It is very important to understand how software works to do this calculation. The moment purchase happens, software will do the calculation. The moment issue happens, software will do closing stock valuation. The moment again one more purchase happens, software will do the closing stock. Software is not waiting to do the closing stock valuation till the end. ಆವಾಗಲೇ ಆಗ್ಬಿಡುತ್ತೆ. The moment purchase happens, the moment sale happens, automatically closing stock is getting calculated. Okay, now let's understand this. So for this, you are supposed to put a format. You remember? Date. Then we have receipts. Here also quantity, rate. Then we have issues. And then we have all of you. Now for every purchase and for every issue, you will calculate balance. That is perpetual. Okay. Now let's start. What is the first date? December 4th. Aita. It is what? Receipt. Now what is the quantity that we have received? All of you. Tell it from the question. 900 rate 50. So this becomes, so that day no issues. So balance is 950 45,000. Aita. Next what happened? Next date 5th December, there is an issue. 500. Tell me this 500, which price should I use to record the issue? There is only one lot, which is 50. Of course, it would have gone from that lot only, no? So 500 into 50, 25. So remaining is, out of 900, 500 gone. Remaining quantity is 400. Will be valued at 50 only because there is only one price. For identical items, when you have multiple prices, that is a problem. Here, same, no? Next. Date 10, 12. We have a receipt. How much? 400. And rate is? Rate is 55. So no issues. So now your total balance became how much? You will write it separately in the balance. 400 is already there. 400 valued at 50 rupees, which becomes 28. I'm talking about this. Already we have that balance, no? That balance and the new balance, which is clear. So you'll write it like this. Don't club it. We'll club it only in weighted average. Next. Again, date 11 December. How much? So it is? It is 16,000. So now what you'll do? Write all the balances again. First you have 400 units of 50 rupees each. That's a balance. Then 400 units of 55 each, which is 22,000. And the new lot, 355, 16,500. Correct? Next. Receipt. How much? 60. So total becomes 12,000. So again, write down cumulatively everything. And the new lot is 200, 60, 12,000. Correct? Now the crazy thing. Now issue, no? I guess. How much? What is the date? 20th December. We have an issue, which is 600 units of. That is what we have to find out. So what we are following? FIFO. And the first in goods which came first would have left first. So here we already have a summary. That means out of 600, 400 would have gone from this lot and 200 would have gone from second lot. So let me write the issue like that. So IAR 400 has gone from 50 rupees lot and 200 has gone from. So this comes to 11. So can you tell me what is the balance now? First lot is completely empty. Out of second lot, how much is there? 200. Because 200 is gone, 200 is there. 200 into 55. Then okay. All of you. Then again we have anything? 28. But it's okay. You understood till here, no? This is the thing. This keeps happening until whatever number of purchases receipts they have. Okay. Now, based on this side, only LIFO will also happen. Instead of FIFO, you'll do last in, first out. So that's also okay. Let's do average. Okay. No. So in average also we have two types. No. First is simple. So simple is very simple. Okay. I will take this example only. So what you will do is, I thought we're learning this simple average in periodic. Okay. You have all the purchases in that has happened in that period, and you have all the prices. No, simply add all the different prices that is available to you. 50 plus 55 plus 55 plus 60 plus 47. These are the 5 different purchase price you have, and divide it by 5. Number of purchases is 5. No, take the 5 prices, 5 different prices divided by number of purchase. How much do you get? It is 53.4. You will value your closing stock at 53.4. How much is your closing stock? Tell me. 1000. Remember, we did already. So the 1000 into each item is 53.4. So your closing stock will be valued at. Simple average is very simple. Next comes, where did it go? Weighted average. Now let's turn weighted average in. See, simple, if you know periodical, that should be sufficient. No need to worry. Weighted average, again, under both periodic and perpetual. So first, let's learn in periodic. Okay. Again, coming here. This is the set of purchases that you have. Now, what you have to do is multiply this column B and column C. Okay. 900 into 50. How much? You have to multiply B into C, which is then then 37. So total this column. It is 1,33,100. So what did you do? B into C. You took all the purchase prices. We are doing weighted average under with which inventory taking? Periodic. So you multiplied, you got the total. This total you will divide it by your total number of units that is purchased. So it comes to, so it 50. So 51.19. This is the cost that you'll use to value the closing stock. How much is your closing stock? 1000 units. How did we get 1000 units? Receipts is 2600. Issue is 1600. Closing stock is 1000. So your closing stock will now be valued at 51,190. All of you clear? So in periodic, you'll go to the periodic period end, take all the purchase price, do this calculation. Over. You'll not worry about issues in case of periodic. You observe that in periodic we are not worrying about issues. Take the purchase prices, calculate the average. Okay. Now let's do weighted average for perpetual. So for that also we need the same format. Okay. So the table. What? The weighted average. So periodic we won't do it table. No. Yeah, the table only comes for in average. In average, yeah, correct. Even for FIFO, LIFO also, for periodic will not do any table. Which one? Hey, this was not periodic, da. Hey, no. This I had written before. While doing, you should have seen it. It was perpetual only. Periodic, you'll do it there only. FIFO was done in the question only, no? If you remember. Huh? Simple average perpetual is also possible. No need to worry about it. Okay, it's okay. Simple average is simple. Tell me what will happen at perpetual level. Every time the purchase sale happens, the price gets averaged. Every time. Simple average, not weighted average. Now we'll do weighted average. Basis on that, you'll get an idea how simple average works in perpetual. Okay. Now for perpetual under weighted average, we need this table. Okay. Now all of you focus. First we had a receipt on 4th December. Same thing. 900 units, 50, 45,000 balance 950, 45. It will not change. Next again on 5th December we have a issue. 500. Since there is only one price, there is no problem. We'll use 50 only. So now the balance is 400, 50, 20,000. Now, on 10th December, there was a receipt of 400 and each item is 55. So total became 22. Now while writing the balance, what you have to do? Club it. How to club it? In weighted average only, you will club 400. Already you had balance. Plus you purchased 400. Now the balance units is 800. Amount also you club. 20 plus 22. Amount becomes. Now what to put in rate? Do 42,000 divided by 800. I thought that is the per unit cost. Averaged per unit cost. Weighted averaged. So 42,000 by 800. 52.5. Clear? We combined it. You added units also. You added amount also. You got these numbers. Then from these numbers, find out the rate. All of you clear? Tell me next one how to do it then. We have 800. Next, we add 300. Now this become 1100. Similarly, add amount also. 42 plus 16,500. So 58,500 by 1,100. How much? 1 week. Okay. You got it? Weighted average perpetual. Now again, 1,100 plus 200. This one. 70,500. So 70,500 by 1,300. 54 point. Now, whenever issue comes, you have to see what we have to do. How much is issue? 600 units, no? On 20th December, we had an issue of 600. Directly 600, it doesn't matter. So issue becomes 600, but the question is which price should I use? The last average price you will use. Which is the last average price? So 600 into 54.23. But decimals and all is not there, Dynabacus. Huh? Okay. Now tell me what is your balance now? You had 1300. Out of that 600 is gone. Remaining is okay, 700. So it will be valued at same guys. The last average was 54.23. When the goods have left at the same average rate, then balance will still be having same average rate. So 54.23. How much is the valuation? 961. Okay. So we still have one more transaction actually, no? But you understood, no? So sale will happen at what rate? The last averaged rate. I thought that at that rate sale will happen. Then remaining units, same last average rate, you'll get the closing stock also. Clear guys, all of you? Now those who have curiosity as to how simple average works in perpetual. See here. Here the balance was 900. Till here nothing will change. Till here nothing will change. The moment one more receipt came, now your balance was how much? 800. Now the price you have to use is what? As per simple average. Till then what was the two prices that you have? 50 and 55. Same. 50 plus 55 by 2. It becomes 52 point. It is coincidence because here both the units are 400 and 400. That's why in both the case you are getting the same answer. Other if it was 500 here and 200 here, then weighted average cost and simple average cost would have been different. It is a coincidence. So you would have taken 50 plus 55 by 2, 52.5. 11th one, how you will do? 3 prices are involved, no? So 50, do it like this. 50 plus 55 plus by 3. Till that level, whatever purchases has happened, take all that. 50. So you would have taken 53 point. Here we'll take 52.5. Don't do like cumulative. Take all the prices available till that point. Okay. This will not come pakka. Don't worry, but it is for your curiosity. Okay. Issue. You have to take the last average price. Issue. Issue price, no? What will you take then? No. What I told, I remember. It cannot be determined, Allah. It doesn't matter, anta. Because here we are, in the entire, all the calculations, we are focused on closing stock valuation. No? Once you find out the average price, apply it to closing units. Why are you focusing on sales? Is what I told. Correct. It can be determined. You'll get the same answer when you take the, what I told that day was, we are focused on closing stock valuation. So don't worry about selling. Fair point. Clear, all of you? Now we'll take some other crazy questions. Oh, we had it here. So one of the famous questions that is asked in these exams is that, no, generally inventory taking for 31st March, at the end of the year, inventory taking happens. Generally, it should happen on the same day. But because of various reasons, they'll not be able to do the inventory taking on 31st March. They'll do it after or they'll do it before. So we'll have to find out the stock as on 31st March. So those questions will come. Correct, no? So that has been asked most of the times if you see the examination pattern. So let's we'll see, we'll learn. Okay. So basically the logic that we are applying while solving this is, see here. This is 31st March. And say suppose there are two possibilities now. Inventory taking can happen here, say on 15th April, or inventory taking could have happened here on 20th March. Two possibilities. Correct, no? We want the stock as on 31st March. So whatever movement of goods would have happened in this period, I have to reverse the effect of those. For example, let's come to this first, right? Whatever purchases would have happened here, what should I do? Because I would have, since I did the physical stock taking on 15th April, that will be the stock as on 15th April. I don't want that. No, I want stock as on 31st March. So I have to come reverse. So all the purchases, generally purchases will have an purchases will increase the stock. So you have to decrease because you're going back. So all the purchases will be subtracted and all the sales will be added. Purchases sales and the use madadkinta. What I'll do is receipts and issues. All kinds of receipts of inventory will be subtracted. All kind of issues of inventory will be added back. Other if you do the physical inventory taking at this juncture, then ulta. All the receipts will be added and all the issues will be subtracted. Direct relationship. Then you will arrive at 31st March. Clear? This is the basic idea that is going. In between, we get some different adjustments. For that, we should know what is that adjustment. No, see, you want stock position as on 31st March. If the inventory, no, wait. 31st March, you want inventory. If the inventory taking happens on 15th April, counting, inventory taking and inventory counting, then you will follow these rules. All the purchase, you're coming back, no? You have done an inventory taking in the future. You want nothing, no overvalued, nothing. I want stock position as on when. I want inventory position as on when 31st March. So if I had counted on 31st March, I would have got correctly. But am I counting on 31st March? I'm counting it on 15th April. But 15th April stock counting will give the position as on 15th April. But I want 31st March. What shall I do? Whatever stock movements would have happened between in these 15 days, I have to reverse. Any purchases happened? Remove it. Because in 15th, what purchases? Purchases that has happened between 31st March and 15th April. All that you have to remove. And any sales, add back. Because I want the position as on 31st March. Then one more special adjustment which you should know is goods sent on approval basis. Correct? So what is this, guys? You remember our example? Goods sent on approval. Correct? No? That lady. I would have sent the goods to customer. I'll tell him, hey, you have 3 months time. Within 3 months time, you can approve the goods and keep it, or you can return. I've given this option to him. And what is the time allowed by me to him? 3 months. Within the 3 months, he can either reject or accept. But if he is not doing anything in these 3 months, and 3 months got elapsed, then it is deemed that the sale has happened. He has accepted. All of you clear? I had given time. Within time, you can accept or reject. After the time, it is deemed accepted. Clear? No, all of you. This is very important point. Now, let's understand how accounting should happen. We are preparing financial statements on 31st March. Okay. As on 31st March, the 3 months period which I have given to my customer is not elapsed. Hello. It is not yet elapsed. Now tell me, since it is not yet elapsed, should I record it as sales? Now the only logical thing is I should record that as sale only when he accepts or when the 3 months gets elapsed. Either of the two events should happen, I will record it as sale. If both has not happened, Can I record it as sale? No, that should not be included in sales. If at all included, we have to, even in final accounts, if at all included, we have to remove it. It is not part of the sales. It becomes sales only if he accepts or if 3 months elapses. Clear? So I have to remove it from sales. Then what should I do? I have to add it to the closing stock. Please understand, guys, always. This is a normal common sense. You have purchased some goods. Okay. Now you'll either sell it. If not sold, it will be there in your go down. That's how you have to show it in your trading account. If it is not sold, if it is not in sales, then it should appear in closing stock. In closing stock, in your go down, no. Because taking happens physically. There it was not there because the goods are with the customer. So what I have to do? I have to see how much stock is there with him and I have to add it in the closing stock. Clear? So what you have to do? Only if he accepts or time elapses, include it in sales. In closing stock, it should not come if included in sales. If both the things has not happened, then reduce it from sales, increase the closing stock because it is your closing stock now. All of you clear? As you're telling. So she's telling some questions are asking physical stock verification. Some questions are asking value of stock. Both are different. I'll see if we can get any example. Both are different. Okay. Just to give you an example, I'll see if you can understand. Now, let's take this example only. Goods sent on consignment. When you do the physical stock verification, this will be there. No. So this technically we should not include when they ask for physical stock verification. Okay. When I'm taking closing stock in trading account, will I include goods lying with customers also? When I take that closing stock number in trading P&L or in balance sheet, along with what I got in physical verification, I'll take this number also in closing stock. Then with my customer, whatever goods is lying an approval which is not accepted by him, that also will add in closing stock. So two things. Value of stock as on 31st March, Andre, the stock which goes to trading account. Here I'll add both goods lying with customers plus physical verification. Physical verification means only this. In go down, how much was there physically? Goods lying with customers is something that I voluntarily added when I included the stock in trading or balance sheet. All of you clear? Then one more special thing that you should know is consignment. So guys, you know what is consignment? So there will be two parties involved here, consignor and consignee. So basically consignee is like an agent. He is selling goods on my behalf in some other place. Consignor is actually the owner of the goods. Consignor send goods to consignee. Consignee tries to sell it on behalf of consignor and he will earn some commission. Okay. Now tell me, whenever consignor sends goods to consignee, is that sales? Hey, no. Consignor, consignee, same only, no. Principal, agent. When should you record something as sales? When consignee sells the goods to outsider, to customer, then you will consider it as sales. The movement between consignor, consignee itself is not sales. For example, this is also a good example. Say suppose we have some stock with consignee. Whatever stock is there with consignee, should it come in my closing stock in trading account? Yes, no, because it's technically mine. I am the owner. But is it there in my go down? Physically? No. It is not there. Understanding? So that is physical verification. But what will I take to trading account? This physical verification plus goods that is there with consignee plus goods that is lying with consumers. Goods sent on approval. Now you're understanding, no? Difference between physical, difference between the stock that goes to trading account. Clear? Huh? Yeah, physically you go down, you will count it. That is physical valuation of inventory. Okay. Okay. All same questions. Which one will do? We have that abnormal loss thing to discuss. You know? So we'll do this one, question number 4. Okay, we have this in our material also. I thought, but this has been repeated many times. See, it's asked in, it's come in RTP also, it has come in June 24 exam. Okay. So let's start. A trader prepared his accounts on 31st March each year. So his year ending is 31st March. Due to some unavoidable reasons, no stock taking could be possible till 15th April. So should we come reverse or should we go forward? We have to come reverse. On which date the total cost of goods in his go down came to be 50,000. When he did the stock verification on 15th April, okay, his total this thing came to 50,000. But we want as on 31st March. The following facts were established between 31st March and 15th April. Goods are sold by the trader at a profit of 20% on sale. So the margin is 20%. You are required to ascertain the value of inventory as on 31st March. So sales should be, you're coming reverse. Sales has the effect of reducing the inventory. So while coming back, add. Purchases has the effect of adding the inventory. So come reverse, subtract. But please don't forget that sales includes profit. Aita, I have to consider the movement of inventory in terms of cost. So in sales, I have to remove. Margin is given, no? So from sales, I have to remove profit. Very good. Then sales return we have. Take sales return, what should I do? Technically, sales return has the effect of increasing in goods. So ulta andre minus, but we can do it in a simple manner. While doing, I'll tell you. Then fourth important point. On 15th March, goods of sale value 10,000 were sent on sale or return basis to a customer. The period of approval being 4 weeks, he returned 40% of the goods on 10th April, approving the rest. The customer was billed on 16th April. So billing only happened on 16th. That means until then he was not billed. If not billed, it is not included in sales. But we are considered on stock. Come here. Now you tell me. We have to understand with respect to these goods, how much was there as on 31st March. So yeah, when did I send? On 15th March, I sent the goods. To customers. Have I passed the sales entry? No. 15th March, I did this. 31st March, tell me, should I consider those goods which is lying with the customer as part of my stock? Yes. Because 3 months. What was the time allowed? 4 weeks is not elapsed and that guy has not accepted also. And it should come in my stock which I take in trading account. Clear? 100% should come. Very good. Now what happened? He returned 40% of the goods on 10th April. We did the stock taking on when? 15th. Andre, when I did the stock taking, already 40% is there. I want how much on 31st March? Full 100%. I want full 100% to be included in stock. 40% I've already got in counting. This 50,000 which you got, no. This already includes 40%. That means how much should I include? 60%. Sale Allah. That is later, Noda. I don't want what happened later. I want the stock position as on 31st March. 31st March, how much should be there? 100. In my stock valuation, 100% should come. But when you do the physical counting, out of that 100, how much you already got in physical counting? 40. And then you have to voluntarily add back 60. Because I told no, the stock, if sold, should come in sales. If not sold, should come in closing stock. Now, as on 31st March, have I put it in sales? No, it is not sales. On 16th it was sale. Until then it was not sale. Take it like that one. Okay. Our question is, as on 31st March was it sale? Are you clear? On 31st March it was not sale. Andre, I told you, if something is not coming in sales, you have to include in stock. Now, listen to my story. Now you would have gone to go down. Aita? You counted, say suppose. Do you think in this counting that goods sent on approval is there? Normally, I'm telling, don't consider this question. Normally, say suppose the entire 100% is with that guy. So when I count, it is not coming. So I'll take physical valuation. Should I take that also? Yes, I should take that also. This number will go to trading account, closing stock. But in this question, what happened? When I did the physical counting, 40% had already returned by then. That means out of 100 which should come on 31st March, 40 is already included in physical counting, no? So only 60 I will add as on 31st March. Other if I had not returned, I would have added entire 100%. Clear? Huh? Next, fifth one. The trader had also received goods costing 8,000 in March for sale on consignment basis. 20% of the goods had been sold by 31st March and another 50% was sold by 15th April. These sales are not included in above sales. Okay, good. Good that they have given clarification. Now tell me, we have already decided whatever stock is lying with consignee should be included in our stock. Just like whatever stock was available with the customer on approval basis. That we added, no? Similarly, whatever is there with consignee, that also we should add. Tell me how much is lying with consignee now? 8,000 you have sold totally. Otherly 20% yes sold. That is not there. Gone. Then we are the consignee. Huh? The trader had also, oh sorry, we are the consignee. Then what you tell me? If we are the consignee, can we include his stock in ours? Of course. So whatever his stock, but what would have happened when you did the physical verification? His stock was also there only, no? In the go down. So you would have, in that 50,000 that you have got in the counting, that is also included. Now what we should do? Subtract. Correct? Because that stock belongs to consignor. How much is there? See, out of he had sent me 8,000, it seems. Out of that, 20% is sold. I don't care. Then 50% is also sold by 15th April. And as on the stock taking date, which is 15th April, there is only 30%. I'm consignee, Noda. I would have sold. Consignor sent goods to me, agent. Agent has sold it to outsiders. It's not, no, it's not mine. I'm only agent. He'll send it. When my customer comes, I'll give it. That stock is not mine. It should not come in my books. But why am I still reducing it? When I went to the stock verification, there it is there. No, that guy's inventory also. That I should remove because it's not mine. So how much still remaining? Out of 100% of the goods that he has sent, 30% is still remaining in the go down. So 30,000 comes to 2,400. I have to remove because that is not my stock. Because when I did the physical verification on 15th, that also I would have included. Clear? Huh? So what all we should do now? So value of stock as on value of stock as on 15th April. How much? 50,000. Next we had purchases. Purchases should be subtracted. How much was the purchases? How much? It includes cash purchases also, guys. That is biscuit. I thought just to. Alandre, it's already included. Don't do anything about it. Take 5034. That's all. That will not affect the stock position. So 50. Next, sales will be added, but we have to take cost of sales, not the sales because sales includes profit. So how much sales you have actually? What best you can do is if you have sales return, reduce it from here only, no? Best. So 41,000 is sales. Sales return will always be reduced from sales. So take this as 40,000. From 40, 20% is the margin. So remove 20%. That 20% they are 41,000. Same thing, da. Again, from sales return, you'll have to remove, no? Profit. From sales also you'll have to remove. From sales return also you'll have to remove. So net effect we have done. Same. Okay. So 32,000 is cost of sales. Aita. That is cost price of the goods that we have sold. So that I will add. Okay. Now, next what we had? Goods sent on approval. What we were supposed to do? 60% we were supposed to add. So 10,000, only 60%. But guys, please understand, 10,000 is sale price, no? I cannot consider, I have to remove the profit. So 10,000, how to remove profit? Minus 20% if you do, you'll remove the profit. So minus 20% and then it becomes. Wait, we'll do 8,000. That's the cost. Now into, because I have to add back 60%, 40% is already included in the valuation. So it becomes next. Then minus goods lying with goods belonging to अरे यार goods belonging to consignor. So how much? So value of stock. How much is? I hope this question comes in exam. 84,000. That's what. Hey, calci. Throw that calci da. 70? 79,360. बिल्कुल सही उत्तर 79,366. Okay. Or if you got it, which one? Correct. 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 It will see, including it is only wrong. So you have to exclude it because just like how consignor stock is not our stock, consignment sales is not our sales. I thought if included, remove it and consider. Okay. Minus 5034 you do. Then A minus da, that is illon idakla. Nonsense fella. That also I should do what LKG kid. So we have to do that one more question on abnormal loss. Okay. Yeah, that's crazy. Hmm. Fifth one. This one. Who am I? Consignee. Aita. Who has sent me those goods? Consigner. This, whatever stock is there, should come in whose books? Consigner's books or my books? Consigner books. But what happened? He has sent me to sell it to others. When I go to my godown and when I count, his goods is also there mixed. So in 50,000 that I've got here, 50,000 is what? The value of stock, physical stock taking you did on 15th April, no? There you have got 50. In that 50, the consignor stock is also included, no? Because that is also there here. But should I include it for the book's purpose? No, what should I do? His goods have to remove. That is what I've done. Totally I had received 8,000. Out of that 70% we have sold it to outsiders. That is not there in only, no? That is not there only, no, in the stock. So how much will be there mixed? How much will be mixed in the stock? 30%. So 80,000 into 30%. Minus 20%. For my, no, da, no, 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 no. I understood your problem. Wait. See, goods costing 8,000. Cost 8,000 itself is cost. Why are you removing profit? That's why I've done 8,000 into 30% directly. It's goods costing. Consignor sent it to me at 8,000. And margin and all is, that is his margin. I'll just get the commission. My margin is 20%. On consignment sales, consignor will be having some margin. Aita. Hmm. Hey, say suppose you both are traders. Aita, you are in Mumbai, that guy is in Bangalore. You are doing sales on behalf of this guy in Mumbai. He is doing sales on behalf of you in Bangalore. Will you include his stock in your books? But it is there in your godown because that guy has sent you. What will you do? Aste, whatever is belonging to him, just subtract it. Finish. Don't include it in your, don't do anything. Don't mix his transaction in your books. The only thing that gets mixed is his goods is now lying in your godown. While counting, you would have taken his goods also. That you remove. Clear, all of you? Seventh one. Hey, nonsense. This is simple. No, no. There's one more question, I'll. Same question. No. Is it full question? No? We have this similar question in our book also. No? We'll do that question post break. Okay. That one. And next we'll enter into that chapter. Yeah. Ah, chal bhai. Hey, start da. Oh, wait for him now. Idali. Huh. So come to this question number 9. So very important question, okay? So whatever we learn in this question, you can also apply when similar questions come in exam, okay? So before entering into the question, some basics you should know. Aita? I will tell it first. Yeah. For gross margin, generally when gross margin is given, I'm talking about a total level. Aita? Say suppose the total sales that has happened in a year is 12 lakh. Aita? Please understand this concept. Total sales that has happened in a year is 12 lakh. And say suppose in the question they have given 20% is the gross margin. Can you find out gross profit? Yes. On 12 lakh, if you multiply 20%, you'll get. So you can tell that the gross profit in this situation is 2.4. Now, please understand, you can do like this 12 lakh into 20%, 2.4. You can come to this conclusion only if the sales 12 lakh is only all are. Only the sales that is there in 12 lakhs is all normal sales. When I say normal sales, what you're understanding? Usual. Usual andre. Say suppose I buy a good at 100 rupees and I sell it at 120. So my gross margin is not 20%. Say my selling price is 100 and my cost is 80 rupees. And the 80 rupees is the cost. 20 rupees is the profit. So my sales price is 100. Alva? So in my per product also my gross margin is 20%. Can you see? We'll see here. Cost price is 80. Profit is 20 and selling price is 100. So how much is your gross profit margin? 20 by A. On sales, the margin is always calculated on sales. So your GP margin is per unit sale also your GP margin is 20%. When you take the overall sales also, when you multiply 20%, you are getting a silence 2.4 lakhs as gross profit. You can apply at total level like this only if 12 lakh contains normal sales. Andre, every unit that I've sold in that 12 lakhs, I should have sold it at 100 rupees only. I should have bought it at 80 only. I should have sold it at 100. Then only at overall level, I can multiply 20% and say the gross profit is 2,40,000. If this 12 lakh includes abnormal sales, then can I simply multiply 20%? No. Now it will not come. Abnormal sales and me technically when I buy it at 80, I'm supposed to sell it at 100 to keep the GP margin intact. But if I sell it at 90 or if I sell it at 150, any price other than 100, then the margin will go off at overall level. Do you understand that? Alva? So to directly derive gross profit like this, then whatever sales you have in 12 lakhs, everything should be. This one thing is very important. First logic, you need to understand the question that we solve. This logic you understood? Second logic which you should know to understand this question is, what is this? Trading account, all of you? You know what is the format of trading account? I think you can tell. Two. By sales, by? Okay. Here what will come generally? Wages and all will come. Here we'll keep it simple. So two, gross profit. Now in most of the questions, like the question that we'll do next, okay, we'll have to find out the closing stock position. Aita? Can I find this closing stock as a balancing figure? Yes. Let me tell you in unit terms now. Say in units, I'm not telling in amounts, I'm telling in units. Aita? Say suppose in opening stock we have 2 units. Then we have purchased 10 units. So total I have 12. Say out of 12 I have sold 5 units. That means how much will be there in closing stock? You're understanding? When I have these, and this data, for example, this also. When I have all the data, I can get closing stock as a balancing figure. You're understanding, all of you? We'll come there. This you understood, all of you? If I know all other items in trading account, I can find out closing stock as a balancing figure. Now, one small thing I want to tell. Aita, you have to answer me. This is very important. See, I have purchased how many units this year? 10 units. Aita. What happened in reality? Out of 10, only 5 was delivered in my godown. Aita. The remaining 5 they have not yet delivered. I have purchased. That's why I've included in my purchases, but they have not yet delivered it to my godown. How much is delivered? Only 5. Now that is called what? Goods in transit, because it is still coming in the lorry. It has not yet reached your godown. All of you clear till here? So don't you think GIT is whatever is there in GIT, it is just like my closing stock? So along with whatever is there in my godown, I should also include goods in transit as part of my closing stock, because instead of that goods being there in godown, it is there in lorry estate. But my goods only, no. I told you, if some goods is not coming in sales, it should coming in closing stock. I don't care whether you have it or not. If it is not there in sales, it should be there in closing stock. All of you. Now goods in transit. Technically, it is not there in my godown, but I have to still include that goods in transit. Yes or no? Now the very important tell them.
But was landing on 31st March, and we had purchased on 29th March, but the goods were advanced. So we have to consider them if it goes on to issue.
Sorry, I did not get it.
Now on 28th March, we
purchased, okay.
And on 31st,
the goods came.
No, 31st, the
balance sheet is being.
Yeah. First or second April.
Still we have to include it in closing stock. Yes, correct, no? All of you. Now, the question with respect to this, what I'm telling is, that is what he told you understood. If you have purchased something on 28th, you have included that in your purchases. But that as on 31st March, that goods has not reached your godown. But will you include it in closing stock? Goods in transit? Yes. Because I told no. Because just imagine your trading account as inflow and outflow. In inflow, you have taken no in purchases. That means in outflow side also you have to show somewhere, either in sales or closing stock. If it is not coming in sales, then it should come in closing stock. That's why even if the goods received on 2nd or 3rd April, I will still include it in my closing stock as goods in transit. All of you clear? Now, one more important thing what I want you to tell is, how much closing stock I have in terms of units in this question 7. In this question that I have framed, I told you out of 10, 5 was delivered, 5 was not delivered. I have told. Now, the 7 units already includes goods in transit, or should I add it separately? Aram se see and tell. It includes, or should I add it separately? It's already included, no? Why are you telling like that? Because I got 7 as a balancing figure. This purchase is already considered no by 7. So 7 then when will we? Then there only 2 will be there. Correct? To that separately you would have added 5. When you take the physical counting. But when you find out closing stock as a balancing figure, if goods in transit is included in purchases, then the closing stock which you have got in balancing figure already includes GIT. Hello? This point is very important. Please, now with that in mind, keep these both points in mind and read the next question. Question number 9. Physical verification of stock in a business was done on 23rd June 23. The value of the stock was 4,80,000. So guys, what is happening? I want the stock position as on 30th June. But the stock taking is happening on 23rd June, before. It's not happening after, it's happening before. Goods are sold at cost plus 25%. So this is what margina markup. A margin will always be calculated on sales. If the profit is calculated on cost, then it becomes. However, goods costing 24,000 had been sold for 12. Did you understand? This is what? Abnormal sales. I told you, no? The cost of that goods is 24, but you have sold it at 12. Is your GP margin being maintained? Technically, on every sale, you are supposed to make a profit of 25. But here, in fact, you are selling at loss. So this is an abnormal sale. So if abnormal sales is included in the sales, then I cannot find out the gross profit properly. Clear, all of you? Now, however, goods costing 24,000 had been sold. Determine the value of stock as on 30th June. The following transaction took place between 23rd and 30th. The first thing is, out of the goods sent on consignment, goods worth 24,000 were. I had sent some goods on consignment and the goods are with consignee, correct? No. So whatever stock is lying with consignee, it is my closing stock. So what should I do? Add. No doubt about this. Because it's mine. Goods with my agent is also mine. Add. Second, purchase of 40,000 were made, out of which goods worth 16,000 were delivered on 5th July. Guys, purchases was made before 30th June only. But goods were delivered on. So this is what? Goods in transit. Keep this in mind. Next, sales were 1,36,000, which includes goods worth 32,000 sent on approval. Half of these goods were returned before 30th June 23, but no information is available regarding the remaining. Out of 32, 16 was returned. So pakka, that is not sale. Remaining 16, that means that is still with him only. But still, tell me, period is not elapsed. Acceptance is also not given. So technically that remaining 16,000 also should not be included in sales. Yes or no? 16 is however returned. Good. Reduce it. The remaining 16 also should be reduced because we have not got any acceptance or the period is not elapsed. All of you clear or not? This point you understood? So these are the information. We have to find out the stock as on 30th June. So come on. The easiest method to do to find out the stock, because this is 23rd. No, whenever the stock taking has happened before, okay. The earlier question was stock taking had happened after. Now this is before. Please keep that in mind. Okay. This is much more simpler to do whenever, yeah, we can still do it, but this is much more simpler. Just see this approach. Okay. If you want, we'll do that one also. Now, this is the trading account which is being prepared for which period? 20th, 3rd to 30th June. Correct? No? Aita. How much opening stock we already have on 23rd June? That is whatever you got in the physical verification. How much you have opening stock? 4 lakh 80,000. Simple. How much you have purchased during the year? Here we have started the recording. So purchases is, and we know that this already includes that GIT also. And not consignment is not at all there here. It includes GIT also. Yes or no? I have not reduced. It includes. 16 is already included in 40. Okay, na? Next, sales. No, be very careful. Sales is to. Sales is actually totally 1 lakh 36. Okay. So just all of you first see here. Your total sales is 1 lakh 36. Okay. First, I want to remove the effect of this consignment sales. I'll do it separate. So remove. Because entire 32,000 should not be treated as sales. So I'm removing it. How much? Hey, 32, no? 32,000 I'm removing. Huh? Sent on up. Oh, sorry. Oh, it is good sent on approval. Hmm. Completely removed. Next, I'm also removing the effect of abnormal sales because I'll not get proper gross margin. The gross margin will become wrong. Okay. So what I'm doing, remove. Hey, why I'm removing abnormal sales, you understood? Tell me why. Exactly. The GP margin will not be intact. So I'll remove the effect of abnormal sales. Uh, uh, how much was abnormal sales? 24,000 has been sold for 12. So sales is 12. So remove. That means our normal sales is, it is, okay. So I will take this 92,000 here. Okay. This is normal. On this number, I can easily apply the GP margin. So 2. So how much is 92,000 into? Hey, don't directly apply 25. So it is what? Because 25% is markup. I cannot directly apply it on sales figure. So how much will you apply? So you have to do, if markup is given always, take 92,000. This represents, so it is 25 by 125 you have to do. Correct? Directly 25% you cannot do because it is markup calculated on cost. But 92,000 is a sales figure. So whenever markup is given, what you can do in exam is markup kottidre. If the markup rate is given, but you have to apply this rate on sales, then you will do rate by 100 plus rate. So 25 by 125. So it becomes 18,000.
So that would have been like 30 of the percentage, it would have been 35 by 1%.
Yes. So we got gross profit. One more thing I had to do. Wait a second. Just a second. Sales is okay. I told you, no, I had to remove the effect of abnormal sales. So I removed it from sales. Don't you think I should also remove it from, the source side also? So from opening stock also we have to remove. I have to remove the entire abnormal. It is sold for 12 and it is costing 24. So from sales I remove 12. From costing side I'll remove minus 24 only, no? The cost is 24. Sales in the I've already removed 12,000. So I entirely removed the effect of abnormal loss.
Why do you have to take it full 20?
Because the cost is 24. No, you would have valued it at 24 in the cost side. In trading, the debit side is representing the cost. Credit side represents the income. Income was 12,000. Cost was 24. I don't want the effect of abnormal to come here. So from sales I removed 12. From cost I removed 24. The effect of abnormal is removed. Okay. So this technically I've subtracted 24. Now we can find out closing stock as a balancing figure. Hey, all of you clear? To apply the GP margin on sales, the trading account should not include any effect of abnormal. Remove sales in the tegiri, cost side in the tegiri. Now tell me, what is the closing stock? 4 lakh. This is the closing stock that I've got in trading account. Okay. Now, closing stock that I got above is 4 lakh 22,000 Is there any adjustment that I'm supposed to do for this now? Now, Aram se will discuss. Am I supposed to add GIT? No, because GIT has already come as balancing figure because it was included in purchases. GIT will not do anything. Goods sent on approval, am I supposed to do anything? What? No, no. Goods sent on approval, nothing we will do. No. Correct, no, because here, goods sent on approval, I've reduced it from sales. And automatically it would have come in closing stock, no? Because closing stock I got as a balancing figure. You're understanding, no? Just like how GIT is automatically included. Now, goods sent on approval is also automatically included, no? The moment you removed it from sales. Hello. So don't add it now because I got stock as a balancing figure. All of you clear? So goods sent on consignment, I'm not doing anything. Sorry, goods sent on approval, I'm not doing anything. Goods in transit, I'm not doing anything. Then consignment. I've sent some goods to my consignee. We still have how much goods lying there? We still have 24. Am I supposed to include this? Yes, this will not at all come in my trading, no. That is goods which I've sent to him. I've not recorded also. That I should voluntarily include in my closing stock. So plus how much? 24,000 rupees. 4,46,000. Will I add anything about abnormal goods here? Hey, no, abnormal goods is sold. No, it's not lying in stock at all. Don't worry. Clear? Then I would have added abnormal goods stock also. Guys, if abnormal goods was not sold, then yes, subtracting in the opening, then do normally, everything you do normal. Then again in the end, add back the cost of abnormal goods here. Here I'm not adding because the abnormal goods is sold. It's not there in closing stock at all. Clear? Now please tell me one thing. Why did we not add goods sent on approval? Because the moment I removed it from sales, the closing stock automatically has included it because we got closing stock as a balancing figure. So that's why I taught you that logic before. In opening, there was 2 units. Purchases, there was 10. Totally 12. ನೀವು ಸೇಲ್ಸ್ ಅಲ್ಲಿ ಎಷ್ಟಾಗ್ತಾರೆ ಅನ್ನೋದ್ರ ಮೇಲೆ ಡಿಪೆಂಡ್ ಆಗುತ್ತೆ. If you put less number in sales, closing stock will automatically be more. So when you showed the correct sales, the goods which is supposed to be there with the customer is already come in closing stock. So you don't separately add. Aita? Transit you don't separately add because it's already come in closing stock because it was included in purchases. So that's why I'm not doing anything. Consignment is something which has not come in our trading. I add it. So goods lying with consignee, I will separately add 4,46,400. That's the stock as on 30th June. That's all. Is it? Hey, we have not done this thing. See the direct last answer. That's what. See here. The final answer is 4,46,400. We have got that only, no? We have done it in a simple manner. And they are simply confused, they're not presented in the right way in the answer. So what we have presented, no? Here, now what we have discussed, that is perfect. If you read that, there are chances you'll get confused. Okay. All of you understood, Any doubts?
That computer.
Which one? I mean, AI answer, yeah. Lot. What I'll sit and compile. Okay, all of you. Any doubts with this question? Clear? Abnormal. So whenever this abnormal comes, no, please try to have trading account approach only. Because it's very simple. Trading abnormal effect na tegidre. If you remove the abnormal effect, then you'll get you can take gross profit, then you'll get the stock properly. Now to whatever stock you have got. Aita? If abnormal goods is still there in the go down, add the cost of abnormal goods also. If that abnormal goods is sold, then don't do anything about abnormal goods. Aita. If there is any goods lying with consignee, add to this. Huh? Transit, don't add anything because it's already included in purchases. Goods sent on approval, in this case, don't add anything. It's already there in purchases. Clear? Okay. Any other question you want me to do? Or can we go to the next topic? What's the time? 11:20. In material? Okay. One? Which one? 14th one? 10th one? This one? Come on, guys. So Raj Limited prepared their accounts financial year ended on 31st March 2019 due to unavoidable circumstances. Actual stock has been taken on 10th. So you want as on 31st March. They have taken the inventory counting on 10th April. When it was ascertained at rupees 125. Okay. It has been found that sales are entered in the sales book on the day of dispatch and return inwards in the return inward book on the day of goods received back. So when will you enter something in sales book as sales? When the goods actually leave you. Alva. Other when the sales return happens, return inwards, you will record it as receipt only when the actually the goods are received back. That is your policy. Okay. B. Purchases are entered in the purchase book on the day invoices are received. You understood? Purchases will be recorded the day you got invoice. You will not wait till the goods come to your godown. Unlike your sales and sales returns. The policy is different. Now, sales between 1st April to 9th April amounting to 20,000 as per sales day book. Guys, what will you do about sales? Sales has the effect of decrease in inventory. So, minus ಆಗ್ತಾ you have to add back. Okay. Then, free samples for business promotion issued during 1st to 9th amounting to 4,000. Again, free samples has the effect of decreasing in inventory. So, you have to add back because the inventory taking happened in the future. Alva. Generally, when you give free samples in this period, stock will reduce, but we are coming back, Alva. Add back. So this also will add. This one also will add. Next. Purchases during 1st to 9th amounting to 10,000, but goods amounts to rupees 2,000 not received till the date of stock taking. Now actual purchases is 10. Okay, technically purchase what we have to do. Purchase has the effect of increase in stock during this period. So I'm coming ulta. So I have to subtract this. But the question is how much should I subtract? Will you subtract 10 now? Tell me, when did the physical counting happen? Physical counting happened on 10th April. That day you have got a stock counting of 125. That 125 physical counting of 125. Yes or no? 125 is the result of physical counting. Now with respect to this 10,000, how much was present in the physical counting? 8, no? Because you had purchased 10, but how much you had received? Only 8 physically. So when you had done the physical counting, that 125 includes only 8 and not 10. So now while I am subtracting, I'll subtract 8 and not 10,000. Because you have the practice of recording the purchase the day you get invoice. But you had not received the goods only, no? You had received only 8. So that's why I'll subtract 8. Next. Invoices for goods purchased amounting to 20,000 were entered on 28th March, but the goods were not included in stock. So you have purchased on. Tell me, now the question what I'm asking is, the goods were purchased on 28th, but we have not yet received. Should it come in the stock? Yes, because I only told you, no. In physical counting and as on 31st March, it is not there, maybe. But I will add it separately as GIT, goods in transit. Now these are goods in transit, no. It is included in purchases. That means it should come in closing stock. So 20,000 will be added as goods in transit. So rate of gross profit is 25%. Markup a margin. Very good. So when markup is given, if you have to apply it on a sales figure, you will do rate by 100 plus rate. Okay. So the stock as on, when did you do the physical counting? 10th April 2019. So you've got 1 lakh 25,000. Okay. Stock as on 10th April, 1 lakh 25. Then sales, what to do? Sales should be added back. Sales. But sales includes profit, guys. I cannot add this. I cannot add 20,000 directly. I should add cost of sales. So what should I do? From 20,000, it includes profit, no? Extra adjustments. ಅದು ಸುಮ್ಮನೆ ಬರ್ಸಿದ್ದು ಎಕ್ಸಾಂಪಲ್ಗೆ. It's okay. We'll do this. 20,000 includes profit. I should remove. How to remove? How to find out profit from 20,000? Can I directly apply 25%? No, because 25% is markup. So 25 by 125 ಮಾಡಿದ್ರೆ you'll get the profit. So how much? 1 by 5th, and it becomes 4,000. So the cost of sales is okay. Next, ಏನ್ರಿ? It's here only, no? Next, free samples. You have to add it back. Free samples is already given at cost. Then purchases you have to subtract. Then 20,000 we have to add because goods in transit. We know goods in transit should be included as part of closing stock. So that's why I'm adding it. So stock as on 30th. What is the date? So stock as on what? 31st March 19. One lakh 56. Okay. What other adjustments you told? I had made you write. Oh, what? Just read it out. Same thing we have done. That what will you do? Add. Because his stock is our stock. Then what will you do? Again, that also should be added because we have not received the approval. So you will add only when you're doing it in table format. If you do trading account format, like how we did last question, it already gets included. There you don't add. When you do that format, no, there you do all that. There also you are not supposed to do actually. It's a different. What I have told, goods add I have told. Generally to closing stock we have to add. Other thing, abnormal. Now, okay. Anything else? Hmm? We'll do question number 11 now. One more on this. Let me see how we'll approach it. Last one for inventory chapter. Hey, what are you doing da? Huh? Huh? So inventory as on 1st April is opening stock 1,76,900. Purchases is 9 lakh 64. Manufacturing expense is 1 lakh 90. Selling expense 38,500. Admin expense 25. Financial expenses 24 900. And sales is 15 lakh 37,000. You know, all these expenses will come in trading account. No. See, opening stock will come. Purchases will come. Manufacturing will come. Selling won't come. Admin, financial expense, no. Sales, yes. Aita, first thing that you have to note. Next. At the time of valuing inventory as on 31st March 24, and they are talking about opening inventory, a sum of 7,500 was written off on a particular item remaining in the balance, which was virtually purchased for 70 and was sold during the year for 65,000. It's the abnormal sale, ಅಲ್ವಾ? You've ಯಾವುದೋ ಕಾಸ್ಟ್ ತಗೊಂಡಿದ್ದೀರಾ, ಯಾವುದೋ ಪ್ರೈಸ್ ಸೆಲ್ ಮಾಡಿದ್ರೆ GP margin is now gone, ಅಲ್ವಾ? So that effect I should remove to find out the correct gross profit. Barring this transaction relating to this item, the GP earned during the year was 20% on sales. So what they've given is margin only, not markup. Then on 15th March 25, the goods of sale value 20,000, which is included in above sales, it's already there here, were sent on sale or return basis to a customer. The period of approval is 4. He returned 40% of the goods on 10th April 2025, approving the rest. So guys, when did approval happen? On 10th April. But we are finding out stock as on 31st March. What was the position is what I want. Alva, he has not approved also. And he has not accepted also, approved also, not returned, nothing has happened. Time also has not elapsed. That means in closing stock, it should come fully. And do you think it should be included in sales? No. So remove it from sales because it's included. Aita. If you find out closing stock as a balancing figure, then don't need to separately add it because it automatically comes. Correct? No? So let's start. Chiller stuff. So how much is your opening stock? My opening stock is 1,76,900. How much is my total sales? 15,37,000. So guys, before going any further, I'll first remove the effect of abnormal from both the sides because I don't want that to affect. So minus, how much is abnormal sales? 60? Sorry. So some sales I removed. From cost angle also I have to remove. How much is the cost of it? You see here, it was originally purchased for, correct, the cost was 70 only. But last year you wrote it off further by 7,500. So right now the cost is being represented at 62,000. So cost is actually 62,500. So okay. Clear. I removed the effect of abnormal. I'll also remove this goods sent on approval basis. Okay. Other things I'll put. What is there in how much is purchases? Purchases is 9,64,000. 2. Manufacturing expenses. Ayo. to manufacturing expenses is 1,90,000. Hey, where did this go? So 2. That's all. No other expenses will come. Can I apply gross profit on the sales now? Yes. I've removed the effect of abnormal and everything. So 1537 minus 65. Anina? Loss? Why da? Tell me. How much is the sales number? 1537 minus 85,000. 1437 plus 15. No. 14 lakh. I can aram se apply on 14 lakh 52. So 14 lakh 52 into 20%. 2 lakh. That's all at 90,000. Something is there. So I've got gross profit also. Since I've put everything required, I can find out closing stock as a balancing figure. One lakh? This guy's calculator is a mistake.
Yeah, 1,06,000.
Okay. So the correct stock is 1,06,800. Will you add goods sent on consignment, goods sent on approval now to this? It is already included. You're understanding why, no? Because it is coming in the source side. Alva. When you remove it from sales and whenever you are finding out closing stock as a balancing figure, it includes whatever is there is already considered in the source side. That's always. So that's the stock. Don't you think the trading account is only simpler?
The balancing figure, and if we adjust it for abnormal and opening stock and sale, that time all the other goods which are sent on upload or consignment will be included.
Exactly. Consignment dirala. Consignment only thing you have to separately add. Andre, your goods lying with consign iruttalla adನ್ನ ಏನೇ ಆದ್ರೂ ಹೆಂಗೆ ಮಾಡಿದ್ರು separately add ಮಾಡಲೇಬೇಕು. It will not come in this equation only. Other all will be included. For example, goods sent on approval automatically included. Goods in transit automatically included. Consign is not included. You have to add it. Yes. Yes. If you have to remove. If it is not approved or if the time is not elapsed, remove it from sales. Automatically it gets updated in closing stock when you're doing it this method. Clear? So let's go to the next chapter, guys. Which one we'll do next? Okay. That is a boring thing. We cannot do it after break. Depreciation. Right? Paida. Now only if you get tired. Okay, we'll do bill of exchange. Even I am not interested to do depreciation. Okay, so again, bill of exchange, small chapter, very easy chapter to score. Aita. Now let's directly come into the matter. Aita. Whenever it comes to bill of exchange, there are two parties, correct? No? Drawer and drawer. Basically, what is bill of exchange? It's an unconditional order which is made by drawer on drawer. For what? For is ordering to pay the drawer. Drawer is ordering the drawee to pay the money. Okay. So drawer draws a bill on drawee. Okay. For drawer, that is bill receivable because for him it's an asset. First of all, why is this guy drawing a bill receivable? Because there is already one transaction which has happened where drawee is owing money to drawer. Maybe drawer would have made some credit sale to drawee of 1 lakh. So drawer is supposed to get 1 lakh from drawee. No? So for this, he might draw a bill of exchange. Aita? From the debtor status, that fellow will become bills receivable. Okay. So what will happen? Drawer will draw the bill and he will show it to drawee. Drawee will see it and he will accept. Once he accepts, for drawee it becomes bills payable. Same thing will become bills receivable for drawer. Correct, no? Then what is some more things before going to journal entry you should know? Huh? Same thing. Now, let's come to drawer. Once he gets the bills receivable, drawer has three options. One, he can wait till maturity, say 3 months. Because in bills receivable, he would have told, pay me 1 lakh after 3 months. Period will be mentioned. One thing is drawer can wait till the maturity, receive the money. Second, he can discount it with the bank. He can receive the money today. Since the money is being received today from the bank will deduct some amount as interest. The third possibility, he can endorse it to some other creditor. Three possibilities he has. Good. Then you should know some things about due date calculation. Hello, what is due date? So what you have to do is from the date of bill drawn, okay, whatever period is given in the question, you are supposed to add. Aita, it's date of drawing the bill plus period. Now about period, if the period is given in 3 months, you will directly add it to the month column. For example, date of drawing the bill is 26 Jan and the bill period is 3 months. So what will you do? Directly add 3 to 1. So it becomes 26th April. Aita 1 ಗೆ 3 add ಮಾಡಿದ್ರೆ 2, 3, 4. 26th April. To that, you are further supposed to add 3 grace days. Okay. So if the period is given in month, then you directly add months. But if the period is given in days, then you remember, Alva, you have to see all your 30, 31 days and add it day by day. While doing that, while counting the number of days, please don't consider the date of drawing the bill. You have to start the counting from the next day. All of you clear? Then what to do if the due date falls on an emergency holiday? It goes to next day. Papa, emergency. Next day, because emergency, no one can foresee it. So automatically date goes to the next one. But if it falls on a national holiday, that is the holiday which you already knew, which you can foresee, then due date falls 1 day before. All of you clear? So if the period is given in days, calculate it in days. If the period is given in months, directly add it to the month. No need to worry about 30, 31. Then no matter what, please add 3 grace days. All of you clear? Now let's come to journal entries. Alva, there's no other thing. All that we'll discuss in the journal entry. So we'll discuss what is noting charges, tell me. See, this bill receivable is there, no, from drawer's point of view. Two things. Now drawee can honor it or drawee can dishonor it. Andre honoring andre he'll pay it on the time. Dishonor andre he'll not pay. Alva. So whenever dishonor happens, generally what will come? Dishonor. Noting charges will come into the picture generally. What is noting charges? Alva. What is the proof that that guy dishonored in the court of law? So the moment suppose I am drawer and Hamad is drawee, I'll go to him. Hey, you told that after 3 months you'll give it. Anta I'll ask. This guy is like, sir, no money, sir. Anta he told. So I came back. I went to court. When he came to court, Hamad, he's like, sir, I was ready to give, no, sir. When did you come? Anta is telling. Makkar. So what I should do? The moment I came, when Hamad told, sir, I don't have money, I'll come back and I'll send the notary. He will record the dishonor. Okay. So that will stand in court. You're understanding? So for that, of course, that guy will not do this for free. So we will pay noting charges. Who will pay? You will pay. Please understand this noting charges. There are two things. Who is bearing it? Who is paying it? I thought the payers need not be the bearers. Correct, no? Now say suppose he drank coffee. You would have paid for now. Later he will reimburse you, no? So who is bearing the price of the coffee? Hamad. Who is paying the price of the coffee? Brijesh. You're understanding? Now what happens in noting charges is, The noting charges will be paid by the drawer. And the drawer and for other cases you can understand it as holder of the bill. ಯಾರು ಬಿಲ್ ನ ಹೋಲ್ಡ್ ಮಾಡ್ತಿರ್ತಾನಲ್ಲ at the time of dishonor. Now in my case, who is holding the bill? Drawer. So noting charges will be paid by me to the notary. But who should bear it? Drawee, Hamad. So later Hamad will pay it to me. I would have paid it now. Hamad will pay it to me. Clear all of you? Now, one more situation. Say suppose I had drawn a bill on Hamad. I got the bills receivable. I had endorsed it to someone else. Now, right now, who is the holder of the bill? That guy. I thought maybe I've endorsed it to Rangnath. Okay. Huh? Rangnath, Sanjay. Sorry, Sanjay. Oh, so there's one more student in Malleshwaram, I guess. So I gave it to Sanjay. Hey, okay. I've endorsed it to Sanjay. Now, Hamad is supposed to pay it to Sanjay, correct? No. But Hamad was like, no, I don't have money. Now, he would have sent notary. So, who would have paid notary charges now? Sanjay would have paid. But who has to bear it? Hamad. So, Hamad, what will he do? Hamad will give the notary charges to me. I will give the notary charges to Sanjay. It will go like that only. The entries happens in that way. See, logic you can understand. Okay. But we are passing the entries, Noda. Or else entries would not have. Okay, forget entry. You're understanding the logic, no? Who is bearing, who is paying? Technically, Sanjay would have paid and he is supposed to bear it. But I am the point of contact, no? When entries come, I'll show this. Why I'm routing it, I'll show you when the entries come. Okay. But logic, you got it, no? Who should pay it? That guy would have paid it. Who is bearing it? Hamad. Keep that in mind. Okay. Now with bank, say suppose I had got the bill, I discounted it with bank. Now the holder of the bill is bank. Hamad will say no, bank will send the notary. So who would have paid the noting charges in this case? Bank. But who should bear it? Hamad. So what happens? Hamad will give it to me, I will give it to bank. Okay. Now I'm routing it. Just keep it in mind. Later we'll discuss when the entries come. So technically Hamad should bear it, but bank would have paid it. All of you clear? Okay. Now let's discuss the journal entries in all the cases. अरे यार Oh. अच्छा यार. You're not able to see it, no? It all takes time now. But it takes time, da. Wait. Now? Yes. Anyways. Now all of you, let's discuss the journal entries. So first, accounting will come in the books of two people, drawer and drawee. So let's first discuss entries in the books of drawer. Okay. So drawer, first, one underlying transaction would have happened in the books of drawer. What is that? Drawer would have sold goods to drawee. That's why he's owing money. Entry for credit sales is, see, they have given AB. We'll take that only. B buys goods from A. So A is the so B is the debtor. So B account debit to sales account. Aita debtors account debit to sales. You're seeing debtors to sales. Next, we will draw a bill. Drawer will draw the bill. Entry, bills receivable will increase and debtors will decrease. So BR account debit to debtors account. Next, over. Now we have drawn the bill. Now what option drawer has? One thing is he can hold till maturity. On maturity, when you get back the money, entries, bank account debit to bills receivable. If the bill is honored in the end. What is the second option you have? Instead of waiting till maturity, you can discount with the bank. Then entry will be bank account debit, discounting charges debit to bills receivable. Aita? Or third is you can endorse it to your creditor. In that case, creditor account debit, liability decreasing debit. Creditor account debit to bills receivable account. Okay. All of you. Now let's discuss dishonor. All of you. Aita. Honor adre we know the entry. It's bank or cash account debit to bills receivable account. If the dishonor happens, okay. Now two situations guys here. Okay. When dishonor happens, that can be divided into three parts. If I was holding till maturity, okay, then what I have to do? On drawing the bill, the entry I would have passed is bills receivable to debtors. On dishonor, I will pass debtors to. All of you agree till here. Other, if I had discounted with the bank and then dishonor happened, then again debtors will come back to bank. First case debtors to BR. If the bills get bank at the discount admele dishonor adre, debtors will again come back, money will go back to bank. Third one is what? Endorse. You have endorsed the bill and then dishonor happened. Then debtors will come back. And creditors will also come back. Okay, all of you clear? Now, very important thing is, this is without noting charges. Aita? With noting charges, what will be the entry? Now, all of you. What? Same entry, that noting charges is now involved. Say suppose 100 rupees is the value of the bill and 5 rupees is the noting charges in our example. Aita? Now, in the first case where I am holding, who would have paid the noting charges? In the first case, holder. Who is the holder in the first case? Drawer. We are in the books of drawer. So entry becomes, now my debtor is supposed to give me how much? 100. 100 plus the noting charges should be borne by Hamad. So 1052. Bills receivable was created only to the extent of 100. So remaining 2 is what? I would have paid no to this fellow. So 2. Bank 5. Aita. Second one. Okay. Debtors to bank. In noting charges, the entry will be same. Aita. Entry will be booksa. Hey, drawer da. Holder will pay it, no da. In the bank case, it will come. Okay, now we are discussing bank case only. I am drawer. I have discounted the bill with the bank. Okay, now dishonor happened. So what will happen? Dishonor entry is debtors to bank because my debtors came back and I have to pay back the money to bank. It becomes debtors to bank. So even in noting charges cases, entry will be debtors to bank, but only thing is the amount will not be 100. Amount will be 100 plus 5. So the amount will be 105. 105. Here it would have been 100 100. Here it would have been. You have to pay the bank. In the, yeah, we have to pay. Drawer. I told no the noting charges is paid by drawer, borne by Hamad. Drawer. That's why I routed it like that. I would have paid it to bank. Alva? Because I'm the holder. I would have paid it to the bank, but it should be borne by whom? This fellow. So that's why in receivable I'm showing 105. You should give me 105. Now I have paid. Okay. Now when it comes to discounting, say suppose you have discounted the bill with the bank and it is getting dishonored. Now what is happening? Entry is same, but amounts will not be 100. Amounts will be 105. Because Hamath is supposed to give me how much? 105. I should give to bank how much? 105 because bank had paid the noting charges this time. Aita. Now endorsement bani. Endorsement alli the dishonor entries debtors to creditors. But here in noting charges it will be same. Debtors to creditors only, but amount will become. Why? Because Hamad is supposed to give me 105 because he should bear it. But creditor would have paid 105 to the 100 for 5. He would have paid 5 rupees towards noting charges. So I should totally owe him 105. So debtors 105. I am supposed to give to my creditor 105. Clear? All of you. The only thing is, in case of discounting and endorsement, dishonor entry will be same in both the cases. Only thing is amount will include noting charges. Only in holder case where you are holding, the entries will change because holder would have paid the noting charges. All of you clear? Any doubts with the entry? Pakka. Oh. Okay. So then we have some special circumstances to be discussed. What is it? Renewal of the bill. What is renewal of the bill, guys? Huh? First of what is renewal by explanation? Renewal means I had given, say suppose I am the drawer. Earlier the period that I had given to Hamad was 3 months. Drawer had drawn a bill on drawee for 3 months. But Hamad realized, I cannot pay it in 3 months. So Hamad comes to me and he'll be like, sir, please give me some more time. So then what will I do? I will renew the bill if you want more time. Basically, I'm extending your credit period. Say you want 2 more months. Will I simply increase 2 more months to you? No. Of course, I should be compensated with something now. What are you giving? That is interest. So you can pay the interest and you can get the renewal. So I will cancel the old bill which was there for 3 months and will create a new bill for 2 months. Now, when this is happening, one thing you have to remember carefully. He is supposed to pay me interest. No. You have to look out for the question. Is he paying the interest immediately? If he pays the interest immediately, receive it and book the interest. Sometimes he'll not pay it immediately. So I'll include the interest amount which he's supposed to pay along with the amount of the new bill. If he pays it immediately, I'll receive. If he's not paying immediately, I'll add the interest amount to the new bill. All of you clear? This one part. And then we have retirement. Retirement andre, I had given him 3 months time. Now he wants to pay it early. Okay, good, no? But since he's paying early, I should give him some benefit, no? So I'll give him rebate. That rebate is a expense. Discount to me, income to drawee. Rebate given during retirement is a expense to drawer, income to drawee. Other interest that we are correcting in renewal is the income to drawer and expense to drawee. Are we clear? Then insolvency will do it when it comes. What is the entry in the books of drawee? We have to understand. Drawee, what will he do? Drawer will draw a bill. Drawee will accept. On accepting, it becomes his bills payable. So what is the entry? His creditors will reduce, his bills payable will increase. Creditors account debit to bills payable. Actually, first one purchase would have happened. Credit purchase. What is the entry for credit purchase? purchase account debit to creditors. Later he accepts the bills payable, so creditors to bills payable. Then when he honors the bill, what is the entry? Honors the bill. If he honors the bill, then it is bills payable account debit to bank or cash. When he honors the bill, when he pays, because liability reduced, bills payable debit to bank is an asset credit. That is what he does when he pays. But when noting charges is involved in dishonor, this is normal. Bills payable to cash is normal payment, normal honoring. When dishonor happens, what is the entry has to pass? The thing is, whenever dishonor happens, I'll write it here. The thing is, whenever dishonor happens, no, you have to reverse the entry. What is the entry that this guy would have passed when he had accepted the bill? Creditors to bills payable. Now on dishonor, it will become creditors. This is the entry passed in the books of drawee in case of dishonor. But what if this is without NC? What if noting charges is involved? Say 100 is the amount, 5 rupees is the noting charge. Same entry, bills payable, 2. Same thing. But now, Hamad, this is Hamad's point of view. No? Hamad is supposed to pay to his creditor how much? It is 5. 100 he was supposed to pay already. Plus he is also supposed to pay 5. So his total liability towards creditor is 105. Bills payable was created only for 100, so I can reverse only 100. That remaining 5, who is bearing it? Hamad. So it is Hamad's expense because he is bearing it in any case. That we are telling. That's why I increased my liability, no here. His actual liability was only 100. Alva. His liability was only 100, but now it became 105 because of the noting charges. And since Hamad is bearing this noting charges in any case, it becomes the expense of Hamad, drawee. So noting charges is a expense in the books of drawee. So it's BP account debit 100, noting charges debit 5, 2, creditors 105. This entry will be passed when, tell me? In the books of drawee, when dishonor happens, when noting charges is involved. Other if noting charges was not there, BP to creditors, just 100, 100. Clear all of you? All the entries. So let's enter into the problem stuff. Please make use of all the hard work that the model has done. Read, solve all the questions. One more thing. I will tell it later.
Hilltop, the curiosity.
Yeah, got it. It came, ಎಲ್ಲರಿಗೂ ನಾನೇ ಕಳ್ಸ್ಕೊಳ್ಳಿಲ್ಲ. So we also have mutual accommodation. So what we'll do a normal renewal, normal question first, and then we'll go to mutual accommodation. So we'll ask the fresh question. We'll see the first question. Fresh. It was asked in Jan 26. It's all same, guys. Easy scoring. All repeated questions. On October 25, X sells goods to Why? For 25,000 rupees plus IGST, full GST entries and all. And draws two bills of exchange on him. The first bill for 15,000, that is for 2 months, and second bill for the balance for 3 months. And the total is, what is the balance amount? Tell me. Add GST and then determine the balance.
40,000.
So plus 18% comes to
4,500.
out of that, first bill is for, so balance is, so first bill is for 15 and second bill is for 14,500. First bill period is 2 months and second bill period is 3 months. Y accepts and return these bills to X. Very good. Both the bills are sent to bank for collection on 1st October. This is also new thing which we have to discuss. In due course, X receives the information from the bank on the due date of the respective bill that the bill for 15,000 has been duly met. Nice. First bill is honored and the other bill has been dishonored, and the noting charges paid on the dishonor of the second bill was 500. Pass the journal entries in the books of X. Nonsense only, no? Huh? We'll go for the next question or what? Or we'll do it. ಮಾಡ್ಬಿಡೋಣ ಎಲ್ಲ ಒಂದ್ಸಲಿ ಮಾಡ್ಬಿಡೋಣ ಅಲ್ಲ ಇಲ್ಲೇ ಅಲ್ಲ ಮನೇಲಿ ಹೋಗ್ಬಿಟ್ಟು ಏನಾರು ಗೊತ್ತೇ ಅಥವಾ ಇಲ್ಲಿ ಕೇಳಿಸ್ಕೊಂಡ್ಬಿಟ್ಟು ಇಷ್ಟೇನಾ ಅಂತ ವಿಲ್ ಡಿಸ್ಕಸ್ ಅಂಡ್ ಗುಡ್ ನೋ ಓಕೆ tell me the entry. Now first X sells goods to Y. Entry is, we are passing the entries in the books of X. X is whom? Drawer. ಆಯ್ತಾ ಸೊ ಎಂಟ್ರಿ Y account debit. Y account debit. This is the mistake. 9 output IGST. Forgot GST entries. Correct, no? Hey, all of you listen. What is the entry? To output GST. Correct, no? Is collecting GST also. So Y account debit 29,500 to sales 25,000 to output IGST 14,500. Next. 4,500. Next. He draws two bill of exchange. Aita. Two. So first, bills receivable account number 1, 15,000 debit. Bills receivable account number 2, 14,500 debit. 2. Mr. Y, 29,500. We drew the bill. Next, third entry. Y accepts and returns these bill texts. Okay, that and all will not come in drawer's books. Next, both the bills were sent to bank for collection. What is this bank sent to bank for collection? Bank will go collect instead of us. It's a service given by the bank. The moment you send the bills to bank for collection, bills sent for collection account debit to bills receivable account credit. Now just the ledger changed. From DR it moved to bill sent for collection. So bill sent for collection account debit to DR account number 1 to BR account number 2. Aita. Now the entire bill receivable balance is there in which account? Bill sent for collection. On 1st October, in due course, X receives the information from the bank on the due date of the respective bill that the 15,000 has been duly met. So it is the entry for honoring. Cash or bank account debit 15,000 to because now the balance is in bill sent for collection. So cash or bank account debit to, use bank only. Bank account debit to bill sent for collection account 15,15. Next. The second bill for 14,500 is dishonored and it involves noting charges. Entry. Normally, what is the dishonor entry in case of holder? Actually, it is Y account debit to bills receivable. But since noting charges is involved here, I would have paid, holder would have paid. In this case, holder is whom? Me, drawer. So Y account debit, it's 14,500 bill amount plus noting charges 500. So total supposed to give me, Y is supposed to give me 15,000. So Y account will be debited for 15. Along with 14,500, it should give me 500. So Y account debit 15,000 to bill sent for collection 14,500. Technically, it would have been bills receivable. Here we are using two bills sent for collection 14,500 to bank account 500 because I would have paid. Clear all of you? All of you got the entries, no? You want me to write, Papa, you will understand. This will also go on YouTube, no? Huh? Chhe, I will also forget it. Yeah. What if it becomes viral? So we'll directly go for accommodation only, no? So before going to that question, do you have any question from accommodation here first? Same. Harry met Sejal here. Sari, September 24 question. We have it in our book also. No, I remember giving this somewhere. Oh, in test I had given. Okay. So we'll do that only then. Now, first of all, you have to understand what is accommodation. Mutual accommodation means generally till now you observed, no, when A draws a bill on B, there will be an underlying transaction. Alva, there was some sale that had happened from A to B. B is owing some money to A. That's why A drew a bill on B. That was the situation. There was an underlying transaction. In accommodation, there is no, technically underlying transaction will not be there while drawing the bill. They are drawing the bill. One party is drawing the bill and another on another to benefit something from that. Most famous way of benefiting is, say, suppose Hamad and Sai are starting one business. Bank is not at all giving them any loan because no income source or nothing. Now they want to start the business. They went to bank. They are not giving loan. Now Sai got crazy idea. Hey Hamad, I'll draw a bill on you. You accept it. I'll take that bill and get it discounted from the bank. So bank will give me money. Understood? So actually any underlying transaction has happened between Sai and Hamad. Anything has happened? No. But still Sai drew a bill. So what will Sai do now? He'll take the bill. He'll go to bank. He'll get it discounted. Of course, bank will deduct some interest. Remaining he'll get. Say 1 lakh was the amount. Bank deducted 10,000. Sai got 90. He came back. What will Sai do now? Both of them need money, no? So maybe out of 90, half he'll give it to Hamad. So 45 he'll give to Hamad. 45 Sai will keep. All of you clear? Now after 3 months, they should pay it back to bank, no? That was the bill period. Okay. Now bank will come and ask whom? Hey, him, no. You are the drawer of the bill. You went to the bank and got it discounted. Now he's supposed to pay it to the bank, no? If he doesn't give, then you have to give. Okay. If Hamad fails to give it, the drawee, then drawer is supposed to pay. Now what happened? Bank called Hamad. Now tell me, how much you both are supposed to pay to bank? These 1 lakh, no. While receiving that, received 90 because bank had deducted the interest. Now along with interest, they have to pay 1 lakh. Okay. That means 10,000 you are incurring. 10,000 only how much each of you should incur. Since you divided the amount half off, the charges also should be incurred half off. So 5,000 should be incurred by Sai, 5,000 should be incurred by Hamad. So on the due date when the bank calls, Hamad is supposed to give 50. So he had taken 45. He will put 5,000 interest that he was supposed to give. He has his 50. Now for the remaining 50, which is supposed to be given by Sai, Hamad will call Sai. Hamad, Sai, give your share down. So Sai will give his share. Totally 1 lakh is collected. Hamad will pay it off to bank. All of you clear? Till here, you understood the accommodation concept.
If they divided it equally, so even that.
Yes.
But then if there's a proportion which they
Yes. For example, out of 90,000 that Sai got, say suppose 75% is kept by Sai and 25% was given to Hamad. Then the discounting charges which they have to pay back to the bank will also be borne in same proportion. I thought same logic. But when accommodation, when one more thing will come, there it will get a little twisted. There I'll explain you. Okay. Basic idea you understood, no? Now these people have one more practice. That one more practice. When Hamad called Sai to give the remaining 50,000, Sai will be like, sorry da, no money. Anta Sai told. So Hamad was like, hey, then Hamad has to pay to honor the bill. So Hamad paid it out of his personal funds, entire 1 lakh. But he needs money now, Papa. He has paid your share also. Now what will Hamad do is, Hamad will use the same idea. Hamad will draw a bill on Sai again. Sai will accept. And Hamad will go to bank and get it discounted. Now Hamad gets 90,000. Understanding? Again they will share. Not never ending. 2 times in your question, maximum it happens for 2 times. So when that reversal happens, no, that's when it gets a little crazier. Okay. Now let's see this example. I don't think here reversal will happen. Yeah, reversal will happen. Very good. Let's read. See, it was asked for 10 marks in September 24. Question 2B. Huh? That's what luck sometimes. Okay. Hey, no. It is chiller only. Huh? Break illa ಮಾತಾಡ Okay. Pause ಮಾಡಿ ಬ್ರೇಕಾ ಬ್ರೇಕ್ ಎಲ್ಲ ಇಲ್ಲ ಬಿಡ್ರಿ It's okay, sleep. Sleep for 10 minutes, you sleep and get up and continue then. No, ಹೌದು ಬಿಡಿ ಇಲ್ಲೆಲ್ಲರೂ ತಮಿಳ್ ನೋಡೋಣ ಇಲ್ಲ ಬಿದ್ದಿದ್ಯಾ ಹಾ ಇಲ್ಲೇ ಅಫ್ಕೋರ್ಸ್ ಇನ್ನೇ ಲಿಟ್ ಇಲ್ಲ ಇಲ್ಲ ಹೌದು ಇಲ್ಲೇ ಚೇಂಜ್ ಮಾಡಿ ಇಲ್ಲೇ ಇಟ್ಟಿತ್ತು Okay guys, so let's understand this accommodation properly with this problem. Aita 100% attention. Now Harry draws a bill on Sejal for 60,000 when on 1/1/23 for 3 months. Okay, so the period of the bill is 3 months. Sejal accepts the bill and sends it back to Harry. Good, no? First Harry drew the bill on Sejal. So Sejal has accepted. Okay. Harry will get it. Always, no, it's better to put one small diagram. So again, no need to refer the question. So there's Harry and there is Sejal. Harry drew a bill on Sejal for how much, sir? For 60,000. Then Sejal accepted it. Harry is now the drawer, no? So he went to bank and he got it discounted. How much did he get? He got 56,000. That means discount is, so bank, so 60,000 only bank deducted and bank gave 56,000 to Harry. Now Harry has 56. Now Harry will share it with Sejal. In which ratio we'll see. Harry remits 1/4 of the amount to Sejal. Okay. So 56 ಅಲ್ಲಿ 1/4 ಅಂದ್ರೆ you're literally doing a abacus, it is 40. So Harry is sending 14,000, which is the 1/4 amount. That means 3/4 of the amount is retained with Harry. Papa, only 1/4 has gone to Sejal. All of you clear? Next, what happened? On the due date, Harry was unable to remit his share to Sejal. Technically, bank will come and ask Sejal now. I thought Sejal called Harry. Harry is like, I don't have money. Now, what did Sejal do? Rather accepts a bill of 80,000. Now, Sejal will draw a bill on Harry, and Harry has accepted a bill for 80,000. And the period is 3 months. Now, what happened? Sejal drew a bill for rupees. Then Harry accepted. Then Sejal went to bank. Okay. In bank, what happened? It was discounted and bank gave 74,600. That means how much is the discount? Out of 80, Sejal got only 74,600 and the discount is 5,400. All of you clear till here? Now again, out of the 74,600 Sejal has, what did Sejal do? Sejal, after making the payment of the first bill, sent 3/4 of the amount remaining to Harry. So first she has made the payment of first bill. How much she was supposed to make the payment of first bill? So technically she would have got 74,600. Out of that, the payment towards first bill is 60. No, to bank totally she's supposed to pay 60. So remaining amount is out of the, yes, correct. No, that's how at least this 14. Yeah. First part. Which part? Already last.
This is giving back.
No, that transaction got over. This 14,000 written in white. Hey, that's what. Hey, what man? White and the tumba in the idea, mom. Okay, now the thing is, Harry had drew a bill on Sejal. Sejal accepted. What was that bill amount? 60,000. That he went to bank and got it discounted. How much did Harry get? 56. 56 only 1/4 he remitted to Sejal, which is 40. He gave it. The reason why they are doing this is I gave that example, no, Hamad, and they wanted to start a business. Okay, so out of 56 he got, 14,000 he remitted to Sejal. Remaining, Harry is only using. On due date, now Harry was supposed to remit the remaining money to Sejal because bank will come and ask Sejal. But this guy did not give. So Sejal did. Beautiful thing. Sejal again drew a bill on Harry. I thought for how much? 80. And Harry accepted it. Sejal went to bank. She got it discounted. How much net amount she got? Out of 80,000, 5,400 was a discount. She got 74,600. Out of the money she got, first thing she did was she paid off the first bill. 60,000 she was supposed to pay towards the first bill. 68. The remaining is 14,600. Out of the remaining, Sejal, after making the payment of first bill, send 3/4 of the amount remaining to Harry. Andre 14,600 ಅಲ್ಲಿ 3/4 is 10,000. So why not? Alalla. That is, I understand. That is a different question. But here the wordings are very clear. From the amount she got, first she has paid the first bill amount. Remaining only she has shared. The wording changes. Yes, yes. So the other questions where mutual accommodation comes, no. Here, madam. The other places where mutual accommodation comes, like this, it has not happened. Okay. Here she pays off the question is very clear. No, am I doing something else? No. She first paid the bill. Remaining amount she has shared. So remaining amount is 14,600. Out of that, 3/4 she has shared it to Harry. So how much will Sejal send to Harry? Rupees 10,000. So, and the remaining amount is being retained by Sejal. What is the remaining amount? All of you see here. 14,600 minus 10,950. It is 3,000. 3,650 is with Sejal. Out of this, 14, then 10,950 went to. We are still understanding the question. Clear? Any doubt still here? No. Now, one more calculation which I want to finish here only. Then I'll go to the entries. Discount charges. Now, in the first case of discounting, here, bank had discounted 4 alva. Tell me, this 4 is borne by Harry and Sejal in which proportion? 1/4 and 3/4 because they shared the proceeds also in that ratio. So that means out of 4,000, Harry will bear 3,000 and Sejal will bear 1,000. He closed the door to someone. Okay. All of you clear? Why did we get 3 and 1? 4,000 is divided in the ratio of 3 is to 1 because the proceeds were shared among them in 3 is to 1. All of you clear? Hey, hello. All of you are there here, no? Next. Which is the next discounting charge? Guys, this is the main important thing where you will trip. All of you see here. How much is the discounting charges deducted by bank here? 5,000. Okay. How will this be shared? Wait. This will be shared in the proportion of how the money is utilized among Harry and Sejal. Which money? The money which I got in discount. Tell me, in 74,600. How much belongs to Harry and how much belongs to Sejal is what we have to find out. All of you are here. Tell me, in 74,600, how much was Harry supposed to give with respect to first bill? Let's see here. 14,000 he has sent andre. So 60 ಅಲ್ಲಿ, guys, 60 was the first bill. 60K was the first bill, including discount. 45K is enjoyed by Harry. 15K was enjoyed by, correct? No, including discount, guys. Illi to Sejal he had sent 14K. Plus Sejal is also supposed to pay 1K, no? What is that 1K? Plus 1K that I've added. Interest, no, which is to be borne by Sejal. Here also, Harry's interest is 3K. And the remaining is 42K, he kept it. Plus 3K has to pay interest. You're understanding? Out of 60, 45 is Harry and 15 is Sejal. So technically on the due date, with respect to first bill, how much is Harry supposed to pay to Sejal? 45K along with interest. So out of 74,600, 45,000 Harry was supposed to pay, did not pay. That is enjoyed by Harry, 74,600. Because Harry did not pay, then who paid? Sejal paid by discounting the bill. So out of 74,600 she has got, 45,000 is enjoyed by Harry. Then what else is enjoyed by Harry? Papa, she also remitted 10,950 also. So total money enjoyed by this person is 55,950. This is by Harry. How much money is enjoyed by Sejal? Remaining, no. Out of 74,600, 55,950 is enjoyed by Harry and the remaining is enjoyed by, subtract 74,600 minus 55,950. 18,650 is 18,650 is enjoyed by Sejal and 55,950 is enjoyed by Harry. In this ratio, I will divide their discounting charges. Clear, Clear, all of you? Question number 8. What? Hey, Noda. No, wait. Guys, just calculate the discount amount. 5,400 is the discount amount with respect to second bill into how much is this guy's share? How much? Hey, what it? Do that first.
4,080.
Okay, correct. One more is 1,350. Correct. No, this is Harry's share. This is Sejal's share. Hey, all of you understood? Pakka. We'll do the next one now. We'll do that. The lekka, you understood the calculation. Okay. Now let's do the journal entries fast. We had in whose books they have asked?
Sejal, but lecture of Harry. Journal and Sejal, Harry, not let's see. A journal and Sejal's account, lecture in
Give journal entries in the books of Sejal and ledger account of Harry. Both are in the books of Sejal only. Aita. Sejal yaro. Sejal is this person. So in the books of all of you, this working is very important. You have noted down. Huh? No. And if you have not noted down, it's okay. Your wish. Hey, wait, I will do it later. Tell me. Now, we want only entry in the books of Sejal. Aram se decide. Aram se. Now you have the whole picture. No. Now, first, Harry drew the bill on Sejal. Sejal just accepted. So we are doing in the books of Sejal. So it's Harry account. Debit 2. How much? The bill was for 60,000. That's the first entry. Next. Bills accepted. Being bills accepted by Sejal for the bill drawn by Harry. Next. She accepted. Now Harry went to bank and discounted. That book, entry will not come in Sejal books. Later, what happened? Harry got 56,000 after deduction of 4. Now Harry remitted 1/4 to Sejal. Sejal received 1/4. So it is bank account debit. Bank account is how much did I receive in bank? But I should also record my share of discounting charges. No. Tell me how much is Sejal's share of discounting in the first 1,000. So debit 1. Because entire 4,000 cannot be borne by Harry, no. 3 can be borne by Harry. 1 should be borne by Sejal. 2. Who gave this money? Harry, no. So 2. Harry account 15,000. Clear? So Sejal received money. Then what did Sejal do? Then bank called. Aita? Bank called. This guy is not giving money. So what did she do? Immediately she threw a bill on Harry again. Okay, because she doesn't have money. Which one? Who is dishonoring? She'll pay the bill now. Harry dishonor entry will come in Harry's books of account. Alva. Now, this guy, Sejal called Harry. Harry did not receive. So Sejal raised a bill on Harry. So entry. Bills receivable account. Debit 2. For what amount? Clear? Now, Harry would have accepted. It came back. Now I would have gone to bank. Sejal went to bank. She got it discounted. So when she discounted, how much money did she get? So she got a money of 74,600 and she's facing a discounting charges of 2. What will happen when discounted? Bills receivable will be credited. So this becomes 80,000. Clear all of you? Now Sejal has 74,600. What did she do next? First thing is she paid off the first bill to bank. So entry. She honored the first bill. So bills payable account, debit. Totally she paid 2. So being clear, being bill accepted was honored. Next. Then what happened? Then whatever money was remaining, out of that, 3/4 she remitted to this fellow, Harry. How much did she remit? Let's go to a diagram. See, out of 74,600 she got 60,000 she paid the first bill. Remaining amount was 14,600. 10,950 she remitted. Okay, so tell me. I'm paying to whom? Harry. So Harry account. Debit. See, please understand how much is Harry supposed to owe me back? What I'll send? Technically, I've sent how much to bank? 10,950. But Harry is also supposed to bear his share of discounting charges. The thing is, out of this 5,400, entire 5,400 I have booked, Sejal. This belongs to me, entirely. No, we have divided this also, no? Come to the division. Out of 5,400, 4,050 belongs to Harry and 1,350 belongs to Sejal. So I have to reduce my discounting charges by 4,050. So I will credit discounting charges 4,050. So this becomes 15,000. All of you clear here? How that 4,050 came, you understood? 74,600, how it is shared among Harry and Sejal in that ratio. Tell me how out of 74,600, how much did Harry use? Tell me. In 74. First thing is whatever Sejal sent to Harry. How much? 10,000. That 10,950 because Sejal only sent it to Harry now. So Harry is using 10,950 plus he was supposed to give 45. That is being paid by this bill only. No? So that money is also it's as good as used by Harry. 45. What is that 45? The amount that Harry was supposed to pay to Sejal with respect to first bill. Alva 45 plus later Sejal sent 10,950. Total money enjoyed by Harry is 55,950. Total money enjoyed by Sejal is remaining, which is 18,650. In this ratio, I will divide 5,400. Clear? So when I divided, what did I get? 4,050 is the discounting charge of Harry and 1,350 is the discounting charge of Sejal. Done, seventh entry. Then what happened? Harry remitted the money, and that's all, no? Oh, nonsense. Then, on maturity of the bill, Harry became bankrupt and his estate paying 40 paise in the rupee. For that, first I have to find out how much Harry is supposed to pay. So, whenever this comes now in the question, to find out the remaining due, it's always better to put a ledger when so many transactions have happened. However, they have also asked in the question. So, you know how to do the ledger posting. Wherever Harry account is debited, here you put it in debit side. Wherever Harry account is credited in the journal, here you put it in credit side. So let's start. First Harry account is debited, guys. So 2 bills payable, 60,000. Then Harry account is credited. The other accounts are next. Then Harry is again credited. What? Hey, sit down. Then by BR. How much it is, guys? It's credited for 80,000. Next. Again, Harry H. Harry. Then where else Harry? Here, Harry is debited for 15,000. So, to bank 10,952. Discounting charges 40. Clear? So I've posted all the entries to Harry. So what's the balance? Once the ledger is done, let's find out how much balance is pending. 20,000. Receivable or payable? Payable. Which side is greater? Andre, it is still payable, no? Credit side is greater than debit side. So we have a balance of how much? We are getting a credit balance. Harry became bankrupt and his estate paying 40 paise in the rupee. But we are getting a payable. Sejal is supposed to pay Harry. Correct, no? Posting is correct. I just check. We should get a receivable balance. Some posting we have done wrong. So guys, check the posting again. Is your posting is also correct, or you copied from here? Copied, Now wait. First, Harry, you just check. Harry should be debited for 60,000. Then Harry should be credited for 15. Then again credited for 80. Hey, that we have to put now. Again debited for 15. Here Harry is credited for 80. Correct only, no? Oh, wait. Hey, no. One thing that we have, that is very rarely done. Hey, one more thing we have left here, entry. Tell me what it is. The moment this fellow becomes insolvent, yeah, the bill that you had drawn just now becomes dishonored, no? The second bill, which Sejal had drawn on Harry, that becomes dishonored. So entry becomes ulta. You have to pass the dishonor. What is the dishonor entry? So bills, hey, it was discounted. Very good. So it becomes Harry too. Very good. It was discounted with bank, hence it is Harry account debit. How much was the amount? To bank. Being.
Then now if you pass out the bad debts entry, then it will be.
Wait. Being bill drawn on Harry. So the moment Harry becomes insolvent, the bill which we had drawn on Harry becomes dishonored. We pass. Now pass this entry also. So here again, it should come debit side. 2. What was it? 2 bank. It is. Now you see the balance. He's supposed to give us 60,000 receivable. Out of that 60, what happened? Only 40 paisa we were able to recover. So which means 60,000 only 40 paisa is 24. Remaining is bad debts. So entry is lost entry. So I was able to receive bank account debit 18 to 60%, which is 8 6 or 48. Oh, sorry, 40 is realized. Sorry. So 18 to 40%. Oh, sorry, 16 to 40%. 24,000 is what we got. And remaining 36,000 damar. So which goes to 2. Harry. Now Harry's receivable of 60,000 is clear. Now you can post this. Harry is credited. By bank, 24,000, and my bad debts, it is 36,000. Okay. So with that, we are done with this question. Huh? Clear, Madam? One more question we'll do on mutual accommodation. It's okay, Which one? You did how much? His share, 45. Wrong. They're very clearly told in the question. Okay. So that's about mutual accommodation. So 10 marks. I wanted to, and I will not do it. Okay. Entries, I think you are pretty much clear only. But we'll read one more accommodation case as to how the working will happen again. Only the working part. I think entries you are clear only, all of you. Now come to this 10th one, question number 10. Asked in May 2025 exam. Here. We'll just discuss the diagram first. Hey, Sita, listen. For mutual accommodation of himself and Gagan, for their benefit, Aman drew upon Gagan a bill of 7,500 for 3 months. Gagan accepted the bill and returned to Aman. Aman discounted it immediately at 8%. According to agreement, Aman and Gagan shared the proceeds as 2:1. On the date of maturity, Aman remitted his share to Gagan, who honored the bill of. The second thing did not happen only now. Only first thing. He gave off the money when asked for. This is it's okay. This is not a big deal. Okay. I think we are done with bill of exchange. Do anyone else any other doubts you have? What the? One more. Which what one more, man? We'll go for depreciation. Okay, we'll do question 3. It's again same thing. I will do. Okay. Chiller stuff. Asked in May 26. Last exam. It's easy only. That's why. There's no other crazy question to do. If we do one more, no. If you feel if we have to do one more, we'll do mutual accommodation. Alva. Simply just because for the sake of doing it, let's not do the simple one. What do you think? Tell whatever you guys tell. Normal one or mutual accommodation? We'll do mutual accommodation only. Come on. But I don't think we have any other problem here. In material we'll do. Okay, tell me. Two zero. Which one? Which one? 7th. Everyone knows the number also. ಯಾವುದು ಸೈಕ್ ಕ್ವಶನ್ ಹಂಗಾರೆ Okay. X draws a Y. Sorry, X draws on Y. A bill of exchange for rupees 30,000 on 1st April 2020 for 3 months. 205. 204. ಆಯ್ತಾ? Y accepts the bill and sends it to X, who gets it discounted for 28,800. Hey, all of you understood the first part? Very important to draw the drawing. X and Y. X drew a bill on Y. For how much? For 30,000. So Y accepted, then X went to bank. He got it discounted for how much? 28. So discount is? Then what happened? Then what did he do? Then X immediately remits 9,600 to Y. So he sent how much? 9,600 he sent. Okay. That means remaining is retained by X1. Let's divide the discount here only. How much is the total discount? How much is A's and how much is, how much is X's and how much is Y's? How did you do it? Same ratio, no? Out of 28,800, Y is using 9,600 and the X is using 19,200. 19,200. Divide it in this ratio, no? Over. So how much? So out of 1,200, 800 belongs to, 800 is to be borne by X and 400 is to be borne by Y. Over first part we did. Second. Where is it? On the due date, X being unable to remit the amount due, accepts a bill of 42,000 for 3 months. Now what happens? Y draws a bill on X for 42,000. For 42. A accepts, Y goes to bank, discounts it, 42 only. How much will bank deduct? Bank deducts something and bank has given 40,000. 110. And how much did bank deduct? 1,000. Then what happened? Y sends 6740 to X. So Y sends rupees 6,742 X. All of you clear? Okay. So out of 40,110 that Y had, 6,740 is sent to X. Very good. Now to divide this, it is time to divide this discounting charges. In which ratio? In the ratio in which they have shared 40,110. Okay, na? Eka next ಬಂತು ಇವಾಗ Y ಗೆ 40,110. Now we have to see how they have shared this 40,110. In that ratio only you divide. How they have shared 40,110? First of all, Y only sent X. How much? 6,740 plus X was supposed to give Y how much with respect to previous bill? Tell me. When the bank called, X was supposed to give how much to Y? 19,200 cash plus 800 is discount. So he was supposed to send Y 20,000. So here it is. So total money enjoyed is 26,740 by X. And this guy, Y? Remaining 40,110 only 26,740 is X. That means Y is? Which one? ಬೇಡ ನನ್ ತಗೋತಾ ಇರೋದೇ net proceeds ಅಲ್ವಾ 40,110. It's already net. I'm just taking the sharing of netting, net amount. Hey, bond andre they'll divide noda. He would have paid it at that point. Bank has deducted ashte. For our calculation, we are just calculating how much should be borne by each person. Either the second bill discounting charges will be borne among X and Y in which ratio? In the ratio in which they have shared the net proceeds. How much was the net proceeds in the second bill? 40,110, no? I'm just seeing in which ratio they have shared it. I mean, they have shared 40,110. In that ratio, divide 1,890 also. So if 26,740 is used by X, then how much by Y? 40,110 minus 26,740. 13,000? 3. First. In this ratio, you'll divide 1,890. So let's see. 1,890 into 26,740 by how much? 4. Next. Clear? Basically, the ratio is 2:1 only. But even if the ratio changes, how to calculate you understood, no? Very simple, no? Second time, whatever proceeds you got, no? See how you shared. How much did X take? The one thing which is sent by Y to X, 6740. And how much X was supposed to give to Y? So total money enjoyed by is 26,740. Why we are taking this as utilization, did you understand? 20. Because the new bill is drawn for that purpose only. No? So that's why the amount he owes to Y is amount used by him in the new bill discounting. So that is the ratio. So this is how we will share. Clear? That's all. If this much, we can do the entries. You want the entries? I think okay, no? You want? We'll do it fast. It's okay. In whose books we'll do? Exavaya. X book will do. Okay, first. First, X draws a bill on Y. First you should tell. So, bills receivable account to Y. We drew for how much? Da? We drew for 30,000. Then, what did X do? Y accepted, X got it discounted. He got how much? 28,800. There was a discounting charges of 2 BR. It is 30,000. Third one. What? Then he remits to Y 6,740. So Y account debit to bank. How much did he remit? 6,740. He will also reduce his. He remitted 9,600. Along with this, he'll also remit his share of discountings and they'll reduce his share of discounting charges. How much is Y's share of discounting charges in the first bill? 400, 800. Remember? Okay. Next. I remitted. Then I was supposed to remit the money, which I did not. Then that guy raised a new bill. I accepted. So, Y account. Y account debit to okay. So entry. The new bill was for 42,000. So I accepted the bill. That guy went to bank. Okay. And he got it discounted. He got the money. Then he remits money to me, which I will record. How much did he remit to me? Yes, he remitted 6,000. Now I'll also book my share of discounting charges, which is, we have already done the calculation. Alva, here, my share is, X's share is 1,260 discounting charges. So, 2 Y sent me, no? 8,000. Then dishonor. X becomes bankrupt. So X here, hey, we are in the books of X. So X became a bankrupt. So dishonor ಆಯ್ತು. He had recently had accepted a bill. ಆಯ್ತಾ? Now that since it got dishonored, we have to reverse the entry. So what will be the entry? It's bills payable to Y account. Oh, we got it discounted. You're right. So it's bills. Hey, we got it discounted. Hey, we're in the books of dry. Dry get dishonor entry is just ulta. No other thing. Correct? No. So bills payable account debit to what is it? Y account. How much was the bill amount? 40? 2,000, 42,000. Because since I only became bankrupt, I had accepted a bill as a drawee, which I reversed because dishonor. Next. That's all, no? His estate paying 50 paise. Okay. So I was able to pay only 50 paise of whatever was my due. Now, how will you find your due? You don't do anything manually. It's always better to put a ledger account. Whose ledger account? We are seeing how much you owe to Y. So always put Y ledger account to see how much you are owing. How to put this? Wherever Y debited, debit. Wherever Y credited, credit. Clear? I hope you are okay from here. Okay. Simple, no, no. Mutual accommodation. Huh? Huh? Yes, sir. You have to practice, of course. So yeah, with that we are done. So let's go to the next chapter. Let's go to depreciation and amortization. Okay. Nonsense chapter that is. Ah, okay. Let's take a break, guys. Hey, Brijesh, what the here also have messaged. Sir, doubt idea, sir. And Huda, this guy only. From that only I can come to know. Hey, sir, doubt idea, sir. And you only da by reading only I can get it. Again, grammatical mistake. Ready? For the last chapter for the day. ನಾಳೆ ಇದೆ. Just close that door. Sunday it will not be there. Yeah. Fix. Okay. So let's start with the next one, that is depreciation and amortization. All of you? So let's directly understand all the things that is required to solve the problems. Okay. Now tell me guys, first of all, what is the journal entry for depreciation? There are two ways that will give depreciation entries. Correct? No. One is depreciation account debit to asset account. So what is happening in this case? When you give depreciation, the value of the asset is reducing. In the second case, the value of the asset won't decrease. I will keep the asset at the cost only, but the effect of depreciation will go to another account now called as, here also entry same depreciation account debit, but here the depreciation effect will go to provision for. So under first method, as and when you give depreciation, assets keep decreasing. In the second, the asset account will always be at cost only. The depreciation that you are giving every year gets accumulated in which account? Provision for depreciation account. Correct? No. How will we show it in balance sheet? Tell me guys. For example, the cost of the asset is 10 lakh and depreciation that you have given till date is say 2 lakhs. Under the first method, the asset account balance only will be 8 lakhs. So in balance sheet, this asset will be shown at 8. Under this method, asset will forever be at cost only. So I will show it at 10 lakh. Technically now here I have one more account called as provision for depreciation. That account we cannot show it under liability side just because it has credit balance. So we will reduce it from here. Provision for depreciation. On the face of balance sheet, we'll show it in asset side by reducing it from asset account and we'll show it at 8 lakhs. All of you clear? So these two depreciation, these are the two ways of depreciation entries that you have, which you have to understand. Now, so some famous entries we'll understand. Okay. I'll only tell the transaction. Okay. I'll tell the transaction. You have to tell me where the posting comes. So first, on 1st April 2024, a machinery is purchased. Entry, machinery account debit to bank. Alva. So entry 1st April. So whenever you purchase asset, generally the entries will come in debit side, no? Because machinery will be debited. And generally the sale entries will come in credit side, but we'll discuss about it later. So 2. bank account, say 10 lakh. Okay. Then at the end of every year, what will you do? You will give 31st March. So what is the entry for depreciation? Let's suppose we are doing first method of depreciation. So entry is depreciation account debit to machinery account. So depreciation comes. Now you know to calculate this depreciation we have various methods, and the most famous methods we use is SLM. How to do SLM? It's cost minus divided by useful life. So in my example, cost is residual values, useful life is say 10 years. Now depreciation becomes 1 lakh per annum. Okay. So this depreciation becomes 1. So next what you'll do? That year is over, balance the ledger by okay. So SLM depreciation we are clear how to calculate. WDV, 1 percentage will be given. Apply that percentage on cost, and from second year you'll apply it on the written down value. Andre reduce the depreciation, and in the reduced balance you'll apply the depreciation rate. So that's why under WDV depreciation decreases year on year, whereas in SLM depreciation will be same year on year. Correct? No. Then one more depreciation method. Sum of digits. Correct? No. I think once we have to do that sum of digits also. Okay. In problems, we'll see if we can do it. Okay. Now, guys, I closed first year. Then what will I do? Again, you have to carry forward the balance to the next year. So again, first April 2. Back it comes to 9 lakh. Are we clear till here? All of you? Then what happens? Say suppose we have a sale transaction here. For now, I'll write the next part of the question. Asset sold for rupees 9 lakh 50,000. Okay. Now, how to do the sale entries? Tell me. We have already learned very well in this asset account. First, step 1, sale proceeds should come in the credit side of the asset. Step 2, find out profit or loss on sale. If it is loss, it comes in credit side of the asset account. If it is profit, it comes in debit side of the asset. So, first, when did I sell? Say, hey, first I have to date I'll give. Asset sold on 1st April only I'll do. 1st October you told. Okay. Let's say it is asset sold for 1st October. Then what I have to do first? First I have to, step 1 now is give depreciation till the date of sale and then do all other steps. So let's calculate depreciation till the date of sale. So per year depreciation is 1 lakh. Till October, how many months? April, May, June, July, August, September. Into 6 months. So the 6 by 12. That means 50,000. Okay. So first give depreciation till the date of sale by so step 1 is depreciation till the date of sale. Step 2, find out profit or loss on sale. How to calculate profit or loss on sale? It is sale proceeds minus guys carrying amount. So sale proceeds we know it is sold for. What is carrying amount? It is cost minus depreciation till the date of sale. How much depreciation you have given till the date of sale? First year you have already given 1 lakh. Second year now you have given 50. So till the date of sale you have given 1 lakh 50. That means carrying amount is 8 lakh. So it's carrying amount on date of sale. So profit or loss? We have a profit of 1 lakh. Where to post profit here? So we know it should be posted in debit side. 2. Profit on sale. 1 lakh. Then one more thing we have not posted. Sale proceeds should come always. The sale proceeds which you get in bank should always come in credit side of asset account. So by bank account, how much? Okay. Then what else should I do? That's all. And it will automatically get balanced. Correct? No? See? Because you had one asset, that asset you sold. So account got closed. All of you clear? Sale accounting under first method. What is the step? Step 1, give depreciation till the date of sale. Step 2, bank proceeds should come in credit side of asset account. Step 3, calculate profit or loss on sale. Loss either comes in credit side of asset account. Profit either comes in debit side of asset account. Fourth, give depreciation on remaining assets if it is there. Clear? This is in this case. Now how to do it if there is provision for depreciation? That also we have to understand. And here, the method of giving depreciation was depreciation to machinery. So good. How to do this when the method was depreciation to provision for depreciation? That also we have to understand. If you had followed provision for depreciation. We'll only take example. Yeah. We'll take the same example only. Okay. Same example, 10,000, everything. But here, the way we are following is depreciation to provision for depreciation. Earlier, it was depreciation to machinery. No. ಇವಾಗ ಮಾತಾಡೋದು ಸೆಕೆಂಡ್ ಮೆಥಡ್ ಸೇಮ್ ಎಕ್ಸಾಂಪಲ್ ಎಲ್ಲ ಸೇಮ್ ಆಯ್ತು ಫಾರ್ ಅಸ್ ಟು ಅಂಡರ್ಸ್ಟ್ಯಾಂಡ್ ದ ಎಂಟ್ರಿ. See which are the two accounts that comes here? Machinery account and provision for. ಶುರು ಮಾಡೋಣ. Tell me. So first, machinery was purchased on 1st April. Entry machinery to bank. How much? Same example, no? So it is 10 lakh. Tell me, will the depreciation come here only? No. So here we'll just balance it at the end of the year. So by balance carried down 10 lakh. 10 lakh. Okay. But depreciation entry will be passed in this account. Which side will it come? Entry is depreciation account debit to provision for depreciation. So entry here will come in credit side at the end of the year. So 31st March. How much is depreciation? It was 1 lakh per annum because 10 lakh divided by 10 years. So depreciation is. Then what to do? Provision for depreciation is a balance sheet item. This also will be balanced. So at the end of the year, 2 balance carried down. It comes to 1 lakh. Then immediately the first thing that you have to do is carry forward the balances to the next year for both the accounts. So here again 1, 4, 2 balance brought down. How much? 10 lakh. Here opening balance will come which side? Credit side. By balance brought down 1 lakh. Now, in this year only sale has happened when? On 1st October. So let's start understand the sale accounting here. Step 1, give depreciation till the date of sale. What is the depreciation entry here? Depreciation to provision for depreciation. So 110 by till the date of sale it was 50,000, no? Because October is 6 months. So I'll give depreciation for 6 months till the date of sale, 50,000. Step 1 done. Step 2. Step 2 is same. Sale proceeds should come in credit side. Which account? All the sale accounting transactions or entries will happen in machinery account only here. Okay. So step 2 is what? Sale proceeds should come in credit side of asset account. So which is? How much? It is. So it was sold for 9 lakh 50. Step 2 done. Step 3. Calculate profit or loss on sale. Here we got a profit of 1 lakh. So that will be posted in debit side. Profit adre debit, loss adre credit. So 1, 10, 2. Step 3 done. Additional step comes here in provision for depreciation. What is that additional step? The problem is in this method, the cost is separate and the accumulated depreciation separate. Since we are selling the asset, whatever accumulated depreciation is there of the asset in provision for depreciation account, that should be transferred to machinery account. Tell me how much is accumulated depreciation? First year 1 lakh you had given, now you have given 50. So total accumulated depreciation is 1 lakh 50. Transfer this to machinery. Debit provision for depreciation, credit machinery account. 2. Transfer this balance. 1 lakh 50. Now this will come here by provision for depreciation account. Clear? Sorry, 1 lakh 50. Okay. So with that, we are done. If at all you had remaining assets, give depreciation on the remaining assets. Here nothing is there. Close the account. So understood how it changes when it comes to provision for depreciation? Okay. Now same example we'll keep and understand how to do this when we have machinery disposal account. Because sometimes in questions they'll ask, do this depreciation accounting by opening a machinery disposal. That is simpler than this. Only thing that changes here is if you observe both the methods, the sale entries which we are putting, bank, profit, all this, used to come in machinery account. Alva. Now what happens is, now all the sale entries will happen in machinery disposal. Aita. Now for disposal purpose only I have opened new account. Sale entry, that sale proceeds will come in credit side of machinery disposal account. Profit or loss will come in debit or credit side of machinery disposal account. Then the problem is cost is there in machinery account now and depreciation is there in provision for depreciation. Here we transferred the provision for depreciation to machinery. Alva, there the provision for depreciation is also transferred to machinery disposal. The cost component of the machine is also transferred to machinery. All transferred to machinery disposal. Automatically, if you have done everything correctly, machinery disposal account will match, which is the proof that you have done it correctly. Now, for same example, we'll do it. So on 1st April, same example. 2. This one you know already. 10 lakh. Illi. So we'll start guys. Machinery to bank 10 lakh. Then we have to give first year depreciation. Again here. First 31st by. Okay. Now let's close the first year. Okay. Now I'll carry it forward to the next year. Here also. Let's carry it forward. I mean, balance it. Let's carry it forward to the next year. In the second year, sale is happening. So whenever sale is happening, we are opening one new account, machinery disposal account. Okay. Now, tell me, let's start applying the steps. Step one, depreciation till the date of sale. So where will the entry come? Here. Date of sale is 1st October by depreciation is 50,000. Step one done. Step two, sale proceeds. Now, all these will happen where? The sale entries will happen in machinery disposal account. So sale proceeds will come in credit side of machinery disposal. So 110 by 9 lakh. Second, step two, profit or loss. Profit comes in debit, loss comes in credit. Here we have profit. So this also will come in machinery disposal account only. Still 1 lakh. Then step three, the depreciation and cost is papa separate. So we have to send it here to machinery disposal. Let's first come to depreciation. Depreciation has a what is the accumulated depreciation of this machinery? 1 lakh 50. From initially you have to take all the accumulated depreciation. 1 lakh 50 is now transferred to machinery disposal. So I'll transfer it to close this account. Then what is the cost of the asset that I'm selling? This also will transfer it to machinery disposal. 110. That is okay. So let's post it here. So there the entry had come in credit side in machinery account. So here it is. Okay. Again, in provision for depreciation entry had come in debit side. So that I'll post it here in credit side of the disposal account by so if you have posted everything correctly, this account will match. So did you understand how the three different scenarios sale happens? Generally, they'll have doubt when it comes to machinery disposal account. I hope it is clear now. Hmm? Full. Easy, yeah? So we are done with today's marathon. Hey, simply does. Correct. Uh, all that problems only. So we'll do one crazy problem from depreciation. Again, we have to send it. What time is it now? 141. We'll do a depreciation. Depreciation. Hmm. Let's share it. All of you got it? Got it, May 2026 exam. Uyappa. We'll do a May 26 paper. It's all that only. We have the same question in our material also, no? May 26 paper. ಯಾವುದು ಸೈಕ್ ಇರೋದಿಲ್ವಾ? ಸೈಕ್ ಎಲ್ಲಿದ್ರು ಸೈಕ್. This also we have same question. Jan 26. Hey, but I like doing it. Let's do 13th one. Asked in Jan 2026. Question 2C for 8 marks. No, started, Start, Mehta and Company. What? Hey, tell it's okay. Nothing, In exam, Might not. But we don't know from which it will not come, no? So we have to do everything. Mehta and Company had the following balance appearing in its books of accounts as on 1st April 24. Plant and machinery account. Guys, as on 1st April 24, the opening balance of their machinery account was 1 crore. Please note my wordings. Opening balance, not the cost. Okay. Its accounts are made up to 31st March every year and depreciation is charged at 10% per annum under our favorite WDV method. On 1st September, that is in mid April, May, June, July, August, September. A new machine was acquired at a cost of 21 lakh 20 and a sum of 46,900 was incurred on the same day towards installation. Directly attributable expenses should be added. On the same date, a machine which had a cost of 32 lakh 80,500 on 1st April was auctioned for and is sold for 5 lakh 62,500. Another machine which had cost of 32 lakh 77,500 on 1st April 23 having become obsolete was scrapped on 1st September 24 and it realized nothing and it sold for 0. You are required to prepare the plant and machinery account in the books of Mehta. Also show the working for profit or loss on scale and scrapping. Round off the figures to the nearest multiple of a rupee. Whenever that is given, follow that. Okay, in the question. Chiller only, no. Let's first do the working note and then come to the. If I had given foundation exam now, no, it would have been nice. Aram se go to exam and write and come. Huh? ಯಾರ ಅದೇನೋ ಹೇಳ್ತಾರಲ್ಲ ಕಲಿಯೋವರೆಗೂ ಬ್ರಹ್ಮ ವಿದ್ಯೆ ಕಲ್ತ ಮೇಲೆ ಕೋತಿ ವಿದ್ಯೆ ಅಂತ ಹೇಳ್ತಾರೆ. So don't be like me. Back then, no, when I was a student, I was very careless. ಆಯ್ತಾ ಕೇರ್ಲೆಸ್ ಅಂದ್ರೆ this guy only ಹೆಚ್ಚು ಕಡಿಮೆ doesn't care about anything. Okay, just sit in the class, listen. I used to only listen in the class properly. At the working hard, this and all I did not used to do. Now I don't recommend that. What I feel now when I see back at what I should have done. See, if you have little bit knowledge know about something, or if you can understand better than others, use it for your benefit. No, get good marks, read well. Correct? No, simply you should not waste it. Correct? No. Try to, of course, in foundation rank is not possible, but try to get good marks. In foundation, no rank. In foundation, Huh? 20 ranks only. Where from when now? Is it? Huh? It was there, huh? Oh, nice then. I thought it was not there. Same. That is wrong. That is wrong, is what I'm telling. Try for big no like Yash. He could have stopped at KGF. He went to Toxic and Ramayana. Why da? It will go good. No? How? For 200, I had got 113. 113 out of 200. In CPT marks. Ah. I'll tell you how CPT work. You cannot compare with mine. CPT, March, your exam, 2018, my exam got over. Second PUC exam. And in, I think in June 2018, we had CPT. Aita. So the coaching happened in these 3 months. And I wrote the exam also. 3 no alla, 2 months actually. I think it happened in May then. So we had time of only 2 months. In 2 months, we had finished it was all MCQ. The entire CPT was MCQ. Yeah, even accounts. Yeah, yeah. That's why. But time also less. No, in 2 months you have to finish coaching and you have to write the exam also in 2 months. Entire 4 subjects will be there in one day only. Test also. Test. All the 4 subjects same day. In one day. And the first two exams happens together because 50-50 marks, no, all MCQs. And the other two tests happens in the second half of the day. So all 4 papers one day. So you cannot compare. Yours is like descriptive, no, fully no. As good as normal exams. Huh? ಯಾರ್ಗೆ ಯಾರು ಹೇಳಿದ್ದು ಕೋಚಿಂಗ್ ಟು ಆಲ್ಮೋಸ್ಟ್ ಆಗ್ಬಿಡುತ್ತೆ ದೆನ್ ಯು ಹ್ಯಾವ್ ಟು ಸ್ಟಡಿ ಹಾರ್ಡ್ ಬಟ್ ದೋಸ್ ಹೂ ಕಾನ್ಸಂಟ್ರೇಟ್ ಇನ್ ಕ್ಲಾಸ್ even they'll be able to pass in CPT because it's all MCQ, if you're a little smart and if you are very interested, ಏನಂತಾರೆ ಅದು every very concentrated in class, I think you can clear CPT. But now, since it's descriptive, it involves lots of things to remember, because of which you have to do multiple revisions. Thank God, CPT. Now when I'm teaching, I'll feel, appa, imagine if I had to do all this when I was in second PUC, Andre, huh? PS college. Let's continue. Let's finish. So first, let's do the working note, and then we will start with the ledgers. Okay. So working note. So there are two sales that is happening from the existing lot. No, one is one sale is happening on 1st September 24. So date of sale. And one more is being sold on the same date. So both the same. So guys, both the machines are being sold on same date. Date of purchases. First one was purchased hey, where is that sale? On the same date which had on 1st April 22 was auction for another machine which had a cost was scrapped on 1st September. Both on 1st September. First one was purchased on 1st April 22 and one more was purchased on 1st April 23. Correct? Hey, you should tell correct or wrong. Okay. So what was the cost then? The first one had a cost of 32 lakh 80,500. And the second one, uh, 32 lakh 77,500. Okay, now both were sold on this date. So the first thing I do is till the date of sale, I will give depreciation because I need carrying amount as on the date of sale. Correct? No, to calculate profit or loss. So let's give depreciation. Which method? So first I'll give here depreciation for 22, 23. ಎಷ್ಟು ರೇಟ್? Sure. 10%. So 3280 500 into 10%. Correct, no? Will I give depreciation for the next one also? No, that machinery was only acquired on 1st April 23 and the next year. So here no depreciation. So WDB as on March 23 is how much? How much? 29 lakh 52,450 minus depreciation for 23, 24 also have to give fully. So 2 lakh 95,245. For this also I can start giving no because it was purchased in 1st April 23. So this is 3 lakh 27,750. So WDV as on March 24 comes to. Hello, calculators, please help me. Here 20. Now we entered 24, 25. Okay. Here we'll give depreciation only for 6 months because April, May, June, July, August, September. First, then it is 5 months. Very good. Please don't do these kinds of mistakes. So 5 months. How much? So 26 lakh 57,205 into 10% into 5 by 12. Hmm? 760. 16. Around it off. 717. Next here. 1,22,906. So carrying amount as on date of sale. 25 lakh 46,488. Next. Okay. Now let's find out profit on sale also. We sold this for how much? First one we have sold it for 5 lakh 62,500. And second one we have scrapped it and it is 0. So first one we have a loss of. First one is loss or profit? Loss, no? How much? 988. And this one is complete loss of 28, 26, 844. Chiller. Chiller stuff this is. So let's start. Now that we are done with working note, let's start with. So when did the year start? It is from 1st April 24. So opening balance 1st April 24 2. How much is the opening balance? 1 lakh? 1 crore? 42 lakh 50,000. See, the sale is happening on 30th September. Correct, no? So what is the first job that I have to do? Any purchases happened before that? We have purchased, no? On 1st September, there is one purchase. So where will the purchase come? Debit side only. 2. How much? It's 21 lakh 20,000. You can add both. 46 600. 46 900. Okay. So we purchased. Purchase is recorded. Next. Now sale happened. So let's start with sale accounting. On 30th September, no, same year. So first, 30th September, what will we do? Step 1. Give depreciation till the date of sale. Correct? How much is the depreciation till the date of sale? Sorry. It is. Sorry. See, don't do this mistake twice again, okay? So, depreciation till the date of sale. How much is depreciation till the date of sale? See, in this year, you have given a depreciation of 1,10,717, 1,22,906. That is the current year depreciation till the date of sale for 5 months. Hey, hello. Correct, no? How much? 2 lakh. So this is depreciation till the date of sale. So by 2 lakh. Step 1 done. Step 2. Sale proceeds should come in credit side of the account. So 1. We'll club it. Hey, one more is sold, Noda. Anyways, 5 lakh 62. Okay. So it's 5 lakh 62. Fine. Done. Next. Profit or loss posting. So both we have loss. So it comes in credit side only. So this will club. ಯಾಕೆ ರಿಸ್ಕ್ ಸಪ್ರೇಟ್ ಇಡೋಣ 19 lakh 83,988 again by 28 lakh 26,844. As per account, it's not a problem. Aita. Write it separately because I've seen, I remember seeing in all the answers, they keep it separate only. Aita. It's okay. What's wrong in keeping separate? Huh? Safety. Ah, uh, then, so all the sale accounting done. Now we have to give, last step is give depreciation on remaining assets. Now that is one good working note we have to. Aita. First is, from the existing lot, two assets are sold. There is some remaining there. And also we have purchased that new machinery. Aita. That is not included in the opening balance. The new machinery was bought now only. So what to do is, so balance as on 1/4/24, no? 1/4/24 is 1 crore 42 lakh. Now we have to reduce the machines which are sold. Tell me, what will you subtract from here? Ah, here we already have calculated the balances of sold. Which one will you take? You have to take this and this, guys, because the balance which I'm considering here is as on 1st April. So when I'm reducing something, I have to reduce that day's balance only. So 26,57,205. Then machinery scrapped. Adest 29, 49, 750. Aita. So after reducing the sold machinery, remaining is how much? 56. 86 lakh. 0. So into depreciation, this we can give depreciation for entire year. 0. So this becomes 8,64,304. Okay. So this is the depreciation on the remaining assets for year 24-25. All of you clear? Then I should also find depreciation on that new asset, no, which is not included in opening balance. What's the new asset? New asset. It was 21,66,900. For this, we'll give depreciation for 7 months. That was 5, no, this is 7. So, because it was purchased on 1st September. So, 21,66,900 into 10% into 7 by 1 lakh. So that becomes, hey, from 1st September, October, November, December, Jan, Feb, March. How much? I didn't tell me how much? 20 lakh 40,000. I'll tell you where I can use this, Santa. Okay, to matching. Okay. So depreciation is given at the end of the year. So what's the depreciation that we are giving? So two depreciation. It is 8,64,304 plus 1,26,403. So total depreciation is 9,90,000. 9,90,708. Okay. 9,90,707. So we have done the last step. Now what you'll do is balance the ledger. See how much is the balance? It is 98 lakh 19 238. That's your ledger. If you've really done it correctly, the one way to verify it. See, this is the closing balance. No, come here. How much is this? 86,43,045 minus 864,304. ಇದನ್ನ ಮೈನಸ್ ಮಾಡಿದ್ರೆ ಆಚೆ ಎಷ್ಟು ಅಲ್ಲಲ್ಲ 86 minus 8. How much is this balance? 86 minus 8. 77 lakh 4 741. Now if you add the remaining assets WDV and the new asset WDV, because that is what is remaining now with you, it should match with what you got as closing balance. They're getting how much? 90. One nine. Correct. So this is what we got here also. So mostly we have done it correctly. 8 marks in the pocket. Full under 8 of 8. See, when they start giving more marks, they become skeptical. Now they'll check for every single thing. It's okay. This much if you do, that much, that is sufficient. I can guarantee that you'll get good marks on. Question number 13. How much did we get? So it's 98 lakh 19,238. See, they've done it 2 times. Depreciation also 2 times. You observed, So better don't club it. Okay. Any other question you want me to do? I think it's okay. What? Tell Bridesh, I know you're always अंदर एक भूखा आत्मा है. We did not. Do we have any question here? Check. If we have here, we'll do it. 13th. No. Oh, it's there. No. Machinery disposal is there. Best. We'll do 12th one. Last question for the day. Don't worry. Aita, we'll finish this and we'll go home. The following are the details of the machineries held by the firm, because we have all the 3 things here: machinery account, provision for depreciation, machinery disposal. Crazy. So it was asked in September 2025 exam again for 8 marks. Machine 1 was purchased on 1/4/2020. Purchase value 11 lakh. Useful life 8 years. Scrap value 20,000. Machine 2 was purchased on 1st April 22. Purchase value 9 lakh 40,000. Useful life 8 years. Scrap value 40,000. Machine M3. Purchase date 1/4/2024. Purchase value 8 lakh 10,000. Useful life 5 years. Scrap value net. 3 machines that given. The firm uses sum of years digits method. Crazy, bro. Which question is this, For charging depreciation and maintenance a separate account for it. Oh, and the provision for depreciation. On 1st April 24, the M1 machine has become obsolete and has been sold for 1,34,000 when it is sold on 1st April 24. On the same date, the estimated useful life of M2 is being reassessed at 3 years. So with rupees 10,000 as scrap value. You know that change in useful life. Actually, we have that also, in depreciation. With scrap value rupees 10,000. Aha. What question he searched? Huh? What I wrote in September 25. What? Okay. Good. I like it. Even scrap values changed, no? For machinery too. Actually, for machinery too, scrap value was 40. That is also revised. On which date? On, change in all these things, useful life or whatever, is accounted as change in accounting estimate. Okay. Is accounted as change in accounting estimates. Okay. So what you will do is whenever change happens, no, that day, forget whatever has happened before. Leave it. Right depreciation or wrong depreciation or leave it. On the date of change, you do the prospective calculation by taking that day's carrying amount as the revised cost. So you know how to calculate now when estimates change. It's revised carrying amount that day minus revised scrap value divided by revised remaining useful life on the from the date of change in estimate. Aita? So let's start. We want it for 24 and 25. Sale happens in which year? On 1st April 24. So 24 we are free. Okay. Okay. Come on, guys. First, we have machinery account. This question they've asked for 8 marks. Huh? Imagine first time it is coming in exam. I think that September attempt was a deadly attempt. You see September 25 paper once. Even other questions are crazy. Huh? Where? ಏನು? You what? Not changing. That's what. It got tired. Huh? Come on, guys. So they want, no, here. They want machinery account for 24 and 25. That means I need opening balance as on 1st April 2023. Correct? No. They want machinery account for year ending 24 and 25. Now I need opening balance for 1st April 2023. So first I have to calculate that. Aita, till April 2023. Then I'll put the opening balance. Then we'll start. Okay. in this attempt. Great guy. Machine 1, machine 2, and machine 3. What's date of purchase for all of them? It's 1/4/20, 1/4/22, 1/4/20, 1/4/22, and machine 3 is 1/4/24. Cost 11 lakh, 9 lakh 40. Then M3 is 8 lakh. Done. So earlier they were following which method of depreciation? The firm uses sum of years digits for charging depreciation and maintains a separate account for it. So that means I need useful life also. Useful life for everything. 8, 8, and 5. 8, 8, and 5. We'll also write residual value. 20, 20, 40, nil. Okay. So I want to give, I want as on 1st April 2023. See, this machinery was purchased only on 24. I thought. So this is these both okay. So first let's give depreciation for, we are in 20 alva. So 20, 21. Okay. So depreciation will be there only for M1. Now how to calculate it? It's depreciable amount. How is sum of year digits? Depreciable amount into remaining useful life divided by sum of the years. So depreciable amount is always cost minus RV. Depreciable amount into remaining useful life divided by sum of years. Sum of year, that is what it is. No, sum of. In question only they have given. Sum of years digit. I'll tell you what to do. You first write down. Sum of years digit. Okay. So depreciable amount is 11 lakh minus 20, and it becomes 10 lakh 80. All of you clear? No. Into what you have to do is take the remaining useful life as of the beginning. Now tell me, what is the remaining useful life for this asset? As on the beginning only. It is 8, no? Remain. Huh? Sorry? Depreciable amount into 8 that I took remaining useful life divided by the sum of all the remaining useful life digits. So tell me 8, 7, 6, 5, 4, 3, 2, 1. The best way to do it is, so 8 into 8 plus 1 by 2. So this becomes 70, 8 nines are 72. 72 by 200, 36. So 8 by 36. How much it is? So here nothing for the other two machines. Let's go to next year. 21, 22. So till end of 23 I have to give. In this year again, what is depreciable amount? 10 lakh 80,000 into what is the remaining useful life? 7 divided by 36. 2 lakh. Yeah. Total sum of all the remaining useful lives. We'll start with 8 always. Yeah. In sum of years digits method. Okay. It is 2 lakh 10. Let's do it for machinery 2. Machinery 2 has a depreciable amount of, wait, oh, 22. Oh, okay, very good. Next 22, 23. Again, 10 lakh, 80,000 into 6 by 36. So that is 1 lakh. Here, no depreciation. From 22, 23, we'll have depreciation for machine 2. So what is depreciable amount for machine 2? So depreciable amount is 9 lakh into 8 by, same, 8 by 36. Fair. Okay. How much? It is. Hmm. So third machine is there in 24. So that will not come. We'll also calculate for 23, 24. We'll require it for the problem. Okay. So into 5 by 36. How much? Huh? 1 lakh. 150 or 115? Here, second one. Into 7 by 36. That is, this machine still it won't come. Okay. So this much is now okay. We'll calculate sale also now. Which machine we have sold? Machine 1 is sold for 1,34,000. Sold on exactly at the beginning of the year, which is end of 23. So sale happens here. No need to give depreciation till the date of sale. It's already given. So sale, you first find out carrying amount. How much is carrying amount? So the cost was 11 lakh. From 11 lakh minus 2 lakh 40. It even take 10 lakh 80 and start subtracting. That is only for the calculation of depreciation. 11 lakh minus 240 minus 210 minus 180 minus 150. 3 lakh 20,000. That is sold for 1 lakh 34,000. So we have a loss of 1 lakh. So let's start doing this machinery account now. Okay. So what's the opening balance which we wanted on 1st April 23? Come here, we can easily find out. This is 320. Hey, find out carrying amount for this one also. By premium. Ayyo, time is running. Hmm. Okay. What's the carrying amount of M2? So it's 9 lakh 40 minus 2 lakh minus how much? 5 lakh 65,000. Third one is not there only. It was purchased only on. Oh, it's now purchased. So leave it. So opening balance is 8 lakh 85,000. Okay. So machinery account to balance bought down is 8 lakh. Clear, why we took 8 lakh 85? 23. Correct, no? 24 ending starts with 1st April 23, no? Start, now. Next. What has happened first? First only sale has happened here. So there is no depreciation till the date of sale because sale is happening at the beginning of the year. Let's pass sale entries. Start. Hey, it happens on 1 for 24, no? Oh, we are in 1 for 23. So no, no. So it happens in next year. Okay. Have we purchased anything? 1st April. 24. It will come in 24. Sale will come for next year purchase. M3. M3 is purchased in next year. So we are okay now. So nothing now. We'll just put depreciation and we will finish this. Why opening balance? What happened? Eh, correct, correct. This is 23, 24. Guys, we should have taken it here. We want 1 for 23. No, acha, acha. Tell me, calculate till here carrying amount. It is 11 lakh minus 240 minus 210 minus 1 lakh 80. It is 4 lakh. 4 lakh 70. Next 7 lakh. These two we should take it as opening balance. So it comes to 470 plus 740. 12 lakh. Okay, take that. 12 lakh 10,000. Now let's directly give depreciation because nothing else has happened in that year. Oh, we have provision for depreciation also, no? Wait, this will come later. So we have one more account to be prepared because they have also asked us to prepare. Okay. So depreciation will come here, no? So it's given on 31st March 24 by depreciation. How much is the depreciation for 23, 24? No balance is there. Opening balance will be there. Yeah. Here provision for depreciation. No. We'll leave space. How much is current year depreciation? Current year depreciation is 150 plus 175. It comes to 325. So current year depreciation is 320. We'll also have opening accumulated depreciation, no, which is given in the earlier years as on 1/4/23. So that is, guys, one more thing. If we have provision for depreciation account, then we should have taken only cost, no, here in machinery account. Correct, no? So let's just take cost. But however, the calculation was required because we have to put the opening of provision for depreciation here. So 1/4/23 by so what's the depreciation balance? Tell me. How will you calculate? Calculate all the depreciations you have given till 23. So 240, 210, 180 plus 2 lakh. So total 8 lakh. So that's the opening accumulated depreciation. And here we'll just take cost of all the three, all the two machines. 11 lakh plus 9 lakh 40. So it comes to 20 lakh 40. All of you understood, no? Here we have to take only cost because we have that provision for depreciation. Now, 1 year got over. Correct. By close. Provision for depreciation also close. It is how much, guys? 11 lakh 55,000. So let's carry forward the balance to the next year. The way they have tested next level. Here also. Let's bring the balance to the next year. Okay. I've just put the opening balance for the next year. Okay. Now next year, what has happened? First thing is we have purchased also and we have a sale also. First, let's put purchase on 1/4/24. 2. How much is the purchase? M3, no? M3 is 8 lakh 10,000. Next, let's do the sale. So sale entry. So what all will come? Step 1, give depreciation till the date of sale. No need to give here. Beginning of the year only sale is happening. Next, sale proceeds should come in credit side. Oh, yeah, correct. Yeah. We have machinery disposal, no, here. Have an eye on the question also, guys. So all the entries will come. It's okay. We'll do it here. So all the sale entries will come here. Step 1, your sale proceeds will come in credit side. Date is 1/24 by how much is the sale amount? 1 lakh. And then profit or loss on sale. We have a loss on sale, which is 1 lakh 86. Loss comes in which side? 1 lakh 86,000. Correct? No. No. Then your cost and your depreciation should also come for the sold asset. How much is the cost of sold asset? The cost of sold asset is 11 lakh, no? M1 is sold, no? 11 lakh. So what will you do? From machinery, you have to transfer it to machinery disposal account, the cost component. So by machinery disposal, what the cost of M1 is? 11 lakh, because only cost component is there, no? Okay. I should also transfer the depreciation of M1 where? To machinery disposal. Guys, how much is the depreciation of M1? 240 plus 210 plus Hey, one more mistake has happened. Huh? ಏನೇನು assessed value ಅಲ್ಲ. See, we have calculated depreciation till 24 here. Whereas the asset was already sold on, oh, it's sold on 24 only, no? Thank God. Okay. Tension ಆಗ್ಬಿಡ್ತು. So machinery, how much is the depreciation? And then 150 plus, we have given depreciation, no? For 23, 24. 150 plus 175. How much? 150, that's all. How much? You took all the depreciation, no, for M1 till the date of sale. What all did you take? Tell me. 240, 210, 180 plus 150. How much? 7 lakh 8. So that much will transfer to machinery disposal. 7 lakh 80. So in machinery disposal, this will come in credit side. 1,424 by provision for depreciation 7 lakh 80,000. Clear? So cost came, depreciation came, loss came, bank came. If you have done it correctly, now this should match. Matching. What? What is it? Hey, we discussed. What? All should come. Cost. No, the thing is, the depreciation, accumulated depreciation of the sold machine is there in provision for depreciation. Cost component is there in machinery. But sale entries are happening in disposal account. Different. No, I have to transfer all the. This one. That PFD is the accumulated depreciation of the sold asset. No, not that yet. From the beginning till that date. Because 7 lakh 80. Because that's the loss on sale. Why I transferred here is it was in PFD account. When the asset is only sold, what will I do by keeping accumulated depreciation? Transfer it off to machinery disposal. When the asset only gone, what will you do with accumulated depreciation? Correct? No, because your depreciation is getting accumulated in PFD account. So done, Alala, this disposal account done, So yeah. Next. So this we are done. Now sale has happened. We have to find out depreciation for the remaining assets. So M1 is however sold. Correct? No. So this is sold. Leave it. Let's not worry about this. Now we have to worry about M2 and M3. M3 is now purchased on 1,424. For how much? 8 lakh. But please understand, on same day they made one change. What is it? On the same day, the estimated useful life of M2 became 3, scrap value 10. So what you'll do is, now what you have to do is, for M2, whatever you have done before, forget it. From now on, calculate the new depreciation. But what will you take as cost now? Not the earlier one. You have to take the revised carrying amount you have to take. So which is now 5 lakh 65. Now what is your revised useful life? On the same date, the estimated is at 3 years. Okay. So into 3 by 55. Correct. You're right. This thing is revised carrying amount minus residual value divided by revised useful life. Correct? No. We have scrap value of 10, so it becomes 5 lakh 55,000 into wait. This is not required. We want depreciable amount. Depreciable amount is 5 lakh 65,000 minus new scrap values. 5 lakh 55,000 by remaining useful life is 3, no? Divided by sum of digits is 3 plus 2 plus 1. So it becomes 6. Hey, sum of your digits we are doing, Noda. So remaining useful life is 3 divided by 3 plus 2 plus 1. 3 by 6. How much it is? 2 lakh. 75,000 is the depreciation. For this one, depreciable amount 810 minus what is the scrap value? Hey, calci. Uh, 2 lakh 77,000. Next, do we have scrap value for M3? No, scrap value is 0. A, past the 244 it is 8 lakh 10,000 into. What is the useful life for the new machine? 5. So remaining useful life is 5 divided by 5 plus 4, 9. 9 plus 3, 12. 12 plus 2, 14. 14 plus 1, 15. So it is 5 by 15. 5 factorial da. So it is 2 lakh. Which one? Yeah, now normally we'll pass depreciation it.
On other sale is also done, we'll only
Give the depreciation on the remaining. That's it. So 2 lakh 70. Hey, I think it is not 5 factorial, no? It's 5 into factorial is 5 into 4 into 3. Aita. This is 5 plus 4 plus 3 plus 2 plus 1. Hey, no, that and all we have done correctly. Factorial was not correct. Okay. Using 5 factorial is not correct. It's 5 plus 4 plus 3 plus 2 plus. What are you doing? Just add this depreciation, no? Total. A nonsense fellow. 5 factorial was the wrong word to use, I told. Because factorial is 5 into 4 into 3 into 2 into 1. But what we do here is 5 plus 4 plus 3. I told me using 5 factorial was wrong, Nanda. There what? 5 plus 4 plus 3 plus 2 plus 1. Who told it was wrong, da? Wait, I'll tell you what happened. We were calculating that 50, na? I was telling 5 plus 4 plus 3 anta. This guy was watching. I told him, he was looking at me, a 5 factorial no da, anta I told. Then I realized, okay, 5 factorial is 5 plus 4. Factorial is 5 into 4, not 5 plus 4. Factorial we cannot use. It is plus. I meant that. Here the calculations is going correctly only, don't worry. So add the depreciation totally. 5,47,000. So finally, pray to the God. How crazy it is. Now, let's give depreciation as on 31st March 25 by depreciation. Guys, how much is the depreciation now? We have calculated. 5,47,000. Crazy. So, balance it. What's the balance? 1155 plus 547, 500. 9 lakh 500. Pray to God that this number is correct. Hey, balancing da. We gave depreciation just now. Yes. ಅಪ್ಪ ದೇವ್ರೆ ದಯವಿಟ್ಟು ಸರಿ ಇಲ್ಲಪ್ಪ. It's already late today. Correct? Very good. Yes. It is 9,22,000. बिल्कुल सही उत्तर दिया आपने. Wait, we'll balance this also. Huh? From here, any purchase will go to machinery account. Any depreciation given will go to provision for depreciation. Like that, normal cycle now. Hmm. Where is machinery account? Huh? Balance machinery account also, guys. So 31st March. How much it is? 17. Huh. What? Tell. Hey, who is this nonsense fellow? Understood, all of you? Ah, nice. Ah. If you can manage this, then whatever question comes, you'll be able to manage. Yeah. Which one? 780. We can. Aram se. Take these costs. ಇದರಲ್ಲಿ ಉಳ್ಕೊಂಡಿರೋದೇ ಇವೆರಡು add. The remaining is only M2 M3, no? So add it 17 lakh 50,000 matching. Because it's at cost only, no? I guess, yeah, in depreciation. No, I think this is the hardest that I've seen. Every possible thing they have tested here. Master question. I will include it in our foundation, which is happening in the evening. I think once after the marathon. What were you doing till now? Okay. So done for today. Remaining we'll do it in the next class. Bye bye everyone. Bye. Huh? Yeah, we'll have.